here. We just want everybody here to trickle in. We have about 4,000 people here on the session, so we want to make sure everybody has a chance to get in. Make sure to put your chat settings to everyone so that everyone can see your text. You just click on the two and just select everyone. And we're going to be talking about options once again, guys, with Nic Chahine. He's been working options here with us at Benzinga for close to about 12 years, right, Nick? I think so, right? Yeah.
Yeah, thereabouts that. I think 2011. I'm not sure exactly the date, but it's been a long time. So we're doing something right.
Good stuff. And so how's your weekend, Nick? How was everything for you?
Well, I'm sore as heck. Yesterday, I put on a roofer's hat and went up there and tackled a little spot on my roof. I've never done it, so I figured I need to do it at least once. So I won't do it again. It's a lot of work and everything hurts today. Other than that, weekend has been work, and more work after this.
Good stuff. Glad you had a good weekend. So, all right, guys. So give me a one in the chat if you're ready to learn options.
Yeah.
Okay. I need to see ones there. Okay. We got a lot of ones here. Not enough. I need to see a little bit more ones.
Louder,
Come on, guys.
he's saying louder.
Participation is required. Participation makes you a better student. Okay, if you have some options experience, yes, this is for you. We deal with new, advanced, intermediate.
Don, hang in there. And what's for you is to join the team after this. Trust me on that one.
Yeah, no, we'll get over that. We'll go over that as well.
So lots. Okay, so here's the thing. I'd like to see what kind of level of audience we have. So we're going to step away from the ones now and give me a two if you've done options at some level. All right, everybody's done options. No, okay. Okay, a lot of calls, so that's a two. Couple of 5 no's, me beginner level. Okay, that's what I'm looking for. All right, predominantly yeses with a few no's. So I know where to start now. Beginner, that's good. Beginner means no bad habits. and the outcome of today, it should be very, very simple. First of all, you should eliminate the fear of options because of whatever you're going to learn. And I'm not going to give you like the complete answer here. It's impossible to do it in one day, but hopefully I'll infuse enough of a base and understanding to see through the clouds. They're not more dangerous than stocks. They can be more dangerous than stocks, but hopefully we'll learn enough to avoid those dangers. Somebody mentioned buying calls and losing. That's one of the dangers is you lose a lot quickly. Anyway, we'll get to the nitty gritty, but we'll start from a very specific base, defining risk, jump into options, what they are quickly, so that we bring some of those no's back to the level of the twos, and we'll go from there.
Okay, you ready to share your screen, Nick?
Oh yeah, I was just waiting on you. I don't know. You guys are okay. Let's go. I'll share my screen. Got nothing to hide, man.
Let's do like a market overview, right? What are the markets doing right now? And
I got you.
Yep.
Okay, so we'll go from here. Hopefully the screen is visible. All right, so this is the playground that we're in. This is the S&P weekly chart. So last week, one thing I want to tell you, which translates into trading options, very crucial to trading options, is to not listen to the headlines. Turn off the news. You will make better decisions on options because the news is designed to trip you up on options. And my assumption is that the market is out to screw everybody as much as it can. So if you take that mindset, then now you're immediately operating with, all right, where is the pothole as opposed to where the pot of gold? You need to keep an eye on the potholes. And that comes from the news. It's emotional. They make you act at the wrong time. It's not as crucial with stocks because you can hang on to a stock through bad news and it's not going to affect much long term. I mean, you can sit on it. Whereas with options, very important that you don't capitulate at the wrong time or get in at the wrong time. So news is more bad than good for options. Just keep that in mind. If you're taking option cues from CNBC, you're by design late to the party of whatever they're talking about. So you have to be, you have to understand that and have it in the mindset. All right, so what we're looking at is the S&P to tell us a story of what? The bulls are in charge. The dips are being bought. This dip is in the process of being bought. Whether they succeed or not is the question mark. So the idea is when I take a risk, I have to be able to define it. So let's start there. Let's start with me asking you, and I'm going to give you a few minutes to answer. If you've done this before, don't cheat. So you know the answer. I can tell you confidently that I've never seen the answer from one person ever. And I've done this to thousands of people. So I'm going to tell you, throw it out there. Tell me, educate me, what's the definition of risk? And I'm looking for specific things. I'm confident that you will all get most of it. But I'm very confident that if you've never seen me before and heard my definition, that nobody will get it. Not knowing what you're doing, that's part of it. Yeah, cutting out early, that's part of it. Tolerate losing. Exposure, amount of money. Okay, how much money? I got you. Potential loss. Yep. You're all on the right track. You're all doing. Money management, high risk reward. Okay, that's all there. I'm still missing. Negative reward, risk is necessary, of course. Exposure to loss, stress, not able to predict. You can't predict with options. I'll tell you how to get that. Overcoming willingness to lose. Okay, I like that answer there. I forgot. I didn't catch your name. But it's still incomplete. Neo, man, Neo. All right, somebody note KK over there. Do I remember that name from somewhere? Element of risk. All right, I'm going to save you. Nobody got the other part of it. So let's go to the tables. All right, so I'm going to use this as a scratch pad. Okay, so let's see here. The risk are two pieces for me. The first piece is the consequence, the risk, the amount of money. Everybody said that. The reward is out there. The reward is out there. The carrot is out there. The elements of the risk, like when you say I'm managing risk, you're managing two things. Actually, you're managing one thing. I'll get to it. This part is whether you take the trade or not is here. You decide, okay, what's at stake? 5,000, 1,000, you determine that and you set it aside. Okay, you did the homework, you talked to your spouse and you said, okay, this is your family. This is the amount of risk I'm going to take on this trade. I accept it. Win or lose, I accept it. The second part, which is the part you manage, is what are my odds of winning? So when I take this one this is the management part. This one, you set it and you forget it, Ron Popeil. So this is the one you manage. What do I mean? So let's say I like Zoom. I'm just throwing it out there. And I decide to risk $1,000 on Zoom. So I decide that, we talk it over. Okay, it's not too big a portion for my portfolio at this point in time. I like the maximum damage I could take. Okay, so the second part, why am I taking it? Okay, so because I did homework and I think I have a better than average chance of winning. So I give myself, buying any stock, it's 50-50, right? Because it could go up, it could go down. So it's really 50-50. You do homework to increase your bias, your edge. So let's say you were able to say, I give myself 70% chance of having upside in the next 6 months. If it's close to a floor, then I can buy that. I can understand the perception there. So whatever it is, you got a reason to trade. We'll get that in a second. But then I have a perceived percent of success, right? So that's the part I manage. Let's say a week goes by and something happens and I learn something new. And suddenly I decide, you know what? I was more confident back then and now I'm less confident. So that is what drives me to leave the trade or not. Okay, so this is where the management happens, this part. And this is where people fail to act in options and see a full loss. They buy a call, they never revisit what are their odds of success. So then you would have to instill a system to where you're checking this every day. Depends on how often you trade. If the trade is super long term, maybe twice a week. But for me, it's every day. For me, it's 2-3 times a day if you're a fast trader. So that's the part where people fail. They buy a call, they stay in it until that becomes unrealistic and through it. When it becomes unrealistic, even if I like staying long, I should reposition the position. I should change the makeup of it. Say, okay, I'm losing percentage. And if I'm long calls, the loss is pretty severe. So we'll talk about how to manage that later, but that's where the management comes. Have a plan. Yes, Vladimir, that's the second thing we're going to tackle today. So first thing is, by defining risk, now I know what I'm managing, because when I say I manage risk, most people talk about this. They don't talk about their odds of success, which is really the part you manage. So this is part one. That's the easy part. This is the tough part. Luckily, with options, that thing here is a number on a table. And I'll show you a little bit later. That is a number given to me. I don't even have to estimate it. It's in black and white. Okay, so that's the first part. If you know risk with options and you stick to these clearly, you should put a piece of paper next to your computer that you use for trading and put this. Say, I have to have the discussion on this part, I set it, and then I have to have a discussion with myself on that part and manage it. If I'm not doing this, I'm willy-nilly. Not good. So that's the risk part. And that applies, by the way, options or not options. But with options, it's even more important. And luckily, it's easier than without options, because this is a tangible number from a table, and we'll get to that in a second. All right. So the second thing that is important to have, especially with options, but also with every other style of trading, is I use the acronym NTNT. And I always put the caveat that I may not have invented it, the idea. I must have heard it like 10 years ago from somebody, but it stuck with me. So basically, if I don't have a trigger, I don't trade. No trigger, no trade. So this part is very important, having a trigger, like a reason. Or I could say no thesis, no trade. T would stand in either way. So the trigger is something on the chart, like right here happens to be a breakout. So that would be a trigger, so I can go long. Or a trigger could be like it fell into support that triggered me to go long, as long as the support holds. And if the support doesn't hold, then I know to leave. So the trigger gives me the exit. Like my trigger was to get long because it fell into support. If this had failed, I should have left. So if I don't have a specific reason trigger, then how do I know when it's time to leave? Okay, so the triggers are on the chart usually, to me. So this was a fail. When they take it out, it becomes a trigger long, because then the bulls overwhelm the bears and they go up. That's the technical, easy way of saying technical trigger. Or on a failure, when they're falling into a prior sharp bounce level, then I can say, okay, my thesis is that it's going to hold this and go. So in either case, I have an actionable line that got me into the trade. So trigger or thesis, that works both ways. The thesis can be also subjective. Example, it can be, let's see here. If you do homework on a stock and you think you know something that other people are not paying attention to, then that's your thesis. And then you can know that whether it plays out or not. Like I did this with GE and Ford when they were $7. I shared it with the gang in the chat room and via email saying, you know what, that was like before last year, before they popped, both of them, they were around 7. I said, my thesis is that GE is on the right track. Management is fixed. They're fixing their problems. And I think down the line, they're going to be a big win. And it did. And Ford was a betting on an American company when everybody else hated it, and it did. So you establish a thesis and you track it, how successful. I did that for GoPro going into this year, and boom, out of the blue, it got caught fire, and on top of it, got caught in the Reddit fight. So that was super good. So Zoom could be a thesis. My thesis on Zoom is that the market is not paying attention to its profit and loss statement. They clear $1 billion in net, and they have like an 8 billion top line now. So it's a legitimate company. They need a couple of years in order to establish it as fact, because this is a pandemic. So that could be my thesis. Also, part of it is we have 8 billion people on the planet. I don't know, thereabouts. I think we can afford to have more than one company doing vaccines. So the fact that Merck is bringing a pill shouldn't collapse a stock as successful as Moderna, for example. And in Zoom's case, similar to Moderna, they're both falling on unrealistic expectations from the market, or fears. So Zoom, legitimate bounce from the pandemic, because of the pandemic caused the increase in use, and they were able to build on that. So I was watching, price to sales were super high, but then it came back and normalized. So now it's a legitimate company. I forgot the metrics on it. Actually, I quoted some Moderna numbers in there. So they're both in my head. I just discussed them about an hour earlier. By the way, an hour earlier, I was in a webinar with the chat members, and they both came up. So we discussed both of them. I'd be more inclined to be long both than short. But I had a thesis or a trigger. So NTNT is super important. Why? Because I don't want to anticipate something. In options, that's deadly. That's where FOMO kicks in. You see something moving. It hits a place where it has failed before, and you think, oh, it's going to break out this time, and you buy it here. And then it fails. With the calls, the premiums disappear really quickly. And unlike owning shares, you can't wait out. So this dip will stop you out, and then it does this in your absence, and then it rallies, and then you get so frustrated, right? So timing is super important in the standpoint of not doing the wrong things. So it's not as critical to be perfect, especially the way I do it, and I'll show you in a second, but it's critical not to do the wrong thing. Like buying here calls is wrong, in my opinion. Better to do it here than here, or buying it here on the dip. So first, define your risk and know what you're managing. Second, have a reason to get long. I get thousands of questions every week as I work with thousands of you there in the chat room. So most every time somebody says, I'm in trouble with this trade, I bought calls, they're down, my question immediately is, why did you take the trade? And it sounds like I'm attacking them. Hey, how come you took? No, I'm really asking why, to see if they have a reason. Because the next thing is that reason still there? If they didn't have a reason, they shouldn't be in the trade. If they had a reason and that reason is gone, then they shouldn't ask me. They have their answer already. So those are important things. Okay, so enough about these two, risk and have a reason. Okay, so let's talk as to how can we deploy risk in options. So now we're going to go into the options perspective of things. I'm going to pull up, this is a practice platform from E-Trade. That's one of the tickers came up. Let's go with, I always default to go into Apple because everybody knows it. And this is a November contract. What do I mean? So options, this is for the people who said no options experience. I'm going to spend a few minutes just to quickly define kind of what they are without using Greek. So Wall Street loves to confuse the hell out of us in defining options. And they tell you there's gamma, vega, this and that. There are very few things that I care about. The most important thing to me is odds, and we'll talk about that, and a couple of little nuances here and there, trying to simplify it to plain simple English. Okay, so the fact that I have different contracts, it's a contract. There's a term. When you go into contract with anything, you have a number of days on that contract. They're not indefinite. So that's one thing. So they have time. This one I clicked on happened to have 40 days. Okay, so they expire in the middle of November somewhere. I want to say the 19th from memory. but sometimes it's the 15th, sometimes it's the 21st. So also they have different prices. So they have contracts at different levels. All right. So you have one side, all of it is puts, and one side here, all of these are calls. So now you say, oh, okay, I've heard of these. Calls are bullish, puts are bearish. No, neither are bullish or bearish. Either can be either or. Confusing. Puts can be bullish, puts can be bearish. Calls can be bullish, calls can be bearish. Depends on what you do with it. Okay. So I did mention they are contracts. I did mention that they have time limit. So when there's a contract and somebody buys it, there's a seller on the other end. What? Yep, I'm going to use the put side. So if somebody has 100 shares of Apple and they are worried for the next few weeks, earnings or whatever, and they want to insure their asset, the shares, they can buy insurance. And in this case, they only need to buy one contract for November, and that will cover them for 40 days. What does that give them? So if they buy this contract, it insures 100 shares. Every contract in here, everywhere, is 100 shares. That's a setting. It's a set number. It doesn't change. So what does that give them? That gives them the right, not the obligation. They don't have to, when you buy insurance on your car, you don't have to claim an accident. You can fix it yourself. So same here. So let's say Apple falls to 120 or 110 or 115. As soon as they buy the contract, in fact, the price doesn't have to fall. They own the right to sell their shares at 125 at any point in time between now and 40 days. You've heard that it has to be below 125. It does not. They can claim it at any point in time, but they'd be idiots to do it above 125 because that's the price they want. They paid $1, so they paid $100. So this order will cost them $100. Why? Because it shows $1. I'm rounding, but it's 100 shares. So you multiply that, you end up the ticker. This order would show minus 100 debit. I spend 100 to insure my shares for 40 days. So the buyer of the put is not bearish. If they were really bearish, they would sell their stock, right? So that's one thing. The seller of the put, well, who's selling this put? Somebody that wants to buy Apple shares at 125. They will say, you know what? You're looking to protect your shares. I'll buy them from you. So the seller of the put does their homework, think that 125 is a bargain for Apple. They sell it. They're bullish Apple. They want to get into it only from a better base. This is a symbiotic relationship. Somebody likes Apple, but they want insurance to own the shares. Somebody likes Apple, but they'd like to buy it lower. So there's a buyer and a seller. So when they say on CNBC, they are buying the 125 put, I question that statement because for every buyer, there is a seller. They interpret the fact that the buyer is more desperate than the seller. Therefore, something's going to happen negative or whatever. I like to use my own judgment. And I haven't said the one thing that you hear about options in every course that you've ever taken. If you have, most options expire worthless. So if CNBC points out a very high options situation, wouldn't that be the definition of, quote, most, and therefore should die worthless? Yeah, so don't trade these. If that meme hits the airways or you read it in print, it's too late. Unless you found that unusual option situation yourself and it's still on the down low, it's already too late. Don't chase is what I'm saying. Do your own homework. Okay, so buyer, seller. So for every buyer of an option, there's a seller. What's the break-even point for the seller here? What does the seller commit to? Well, the buyer buys insurance and says, if the stock price, or at any point in time in 40 days, I can sell my shares at 125. The seller, the person selling this, is obligated to take those shares. So the buyer is in control. The buyer doesn't have to claim the insurance, but your insurance company is obligated to pay you on your car if you submit your claim, if you didn't cheat. Okay, so in this case, if I sold Apple put any point in time for the next 40 days, I could wake up owning 100 shares of Apple, which is what I wanted. So if I sold the put, my break-even point is 124. Why? I collected $1. So let's say it falls to 120. I wake up, I own the shares at 125. So on paper, I lost $5 per share on paper. The put position disappears with all of its losses. It's showing paper losses as the Apple stock is falling, but I don't care because I wanted shares. The put position's losses disappear. What stays is $100 I collected. So now my break-even point is $100 below, which is $1 per share. So 124 or lower, I'm accumulating paper losses. If I wake up and the stock is above that, then I can sell it for a profit, which is $1 plus whatever it was above that per share. So that's the scenario of buying and selling puts. I use it usually to illustrate the point that it's safer to sell a put than to buy shares. What did you say? Yes. So let's consider this scenario. Let's say you bought shares on Friday for Apple at $143. And let's say on the same day on Friday, I sold the 125 put. So you just spent 140 shares times $143 out of pocket expense, and it's at risk right here, right now. There's no buffer. The stock price falls, you're losing money right away. Me, nothing left my account. I collected money to be long the shares. I won't lose money until 124. So let's assume you and me did that. And then 10 days later, the stock is at 124 or 123 or 120. You lost 15, 16, 17, $18 per share, $20 per share if it fell to 120. Me, I lost $4 per share at 120. So who came out better? I spent nothing. I collected money to be long Apple, maybe. If not, I made money out of thin air. You risked $143 times 100 shares right here, right now. And if it fell, you suffered losses immediately, me, not so much. So how you use options determines whether you're being reckless or not. So they can be more dangerous because they are leveraged instruments. So they win faster and they lose faster. Okay, so you have the opportunity to blow up an account if you become irresponsible, willy-nilly trading, of course. But if you use them responsibly, they offer better opportunities in iffy situations. So that's the easy definition of, or displaying the concept of a put, buying it, selling it, what it means, and who would use a put. Somebody that wants to buy insurance, somebody that wants to buy shares lower. That's the buyer and the seller of the put. Somebody that wants to short the stock mildly. How so? Let's say I don't own shares. I can buy a put nonetheless. So how would I make money and why? Let's say I think Apple is falling. I buy a put. It costs $1 now. If I'm right and Apple falls fast, that dollar turns into 2, 3, 4, 6, however fast Apple falls, it appreciates. Then I can sell the put itself and make money on the difference between price of the put and selling the put. So that's using options to short a stock mildly. Mildly meaning the only thing I can lose is $100 per contract. That's my maximum loss. Versus, I don't know if you know how it works when you quote short a stock. Unlimited losses. I won't go into it. It's basically you borrow shares and you sell them right now when you put the money in your bank. If you're right and Apple falls, you return the 100 shares you borrowed by buying them back at a lower price, and then you return the shares to whoever you borrowed them from. But what if it rallies? What if it's GME? You blow up your account. I suggest that you never ever short stocks in this environment or sell naked calls because it's basically shorting stocks.
Hey, Nick, really quick here, I'm getting a lot of questions here on the Zoom call. Make sure to put your chat messages to everyone, but just getting questions about your chat room. Right now, we're going to focus on the education. I'll drop the link for Nick's chat room here in the Zoom and the YouTube. It's also in the description on the YouTube video. But for now, guys, we're focusing on the education. If we do have time, we'll get to it later during the presentation.
Okay, good. So Jay is asking, how about if Apple goes up to 150? Sure, that's the point. I'm saying if I shorted the stock outright by shorting it, I would have unlimited risk. Buying a put is a better alternative because it's finite amount of risk. I can only lose $1 per contract versus unlimited risk as long as Apple is rallying and I'm short Apple the traditional way. I wasn't condoning buying a put. I rarely buy options willy-nilly without a specific target. So That goes to that note from Jay. I believe it was Jay. Anyway, so I'm a seller of options on any given day. So you've heard the term, I mentioned it earlier, most options expire worthless. So that should set you on the path to learn how to sell options responsibly, because most of them will expire worthless. So why on earth would I want to be buying? I should be the seller. Which broker, they all work to a degree. I've been with this one for a super long term, so I'm grandfathered in, and it's hard to move out. I have also Thinkorswim, but I'm not recommending either of those two. There are other ones that are great out there, but there's not one perfect broker. They all break down at certain points in time. This one has a lot of bugs, E-Trade, I can tell you that, but it's easy to learn options by structuring stuff in and out of here. So let's get back on track. So we just defined how to use a put. So what's a call? The call side is when I want to buy those shares, but I don't want to spend 100 times $143 right now. So what can I do? I can spend $400 by buying one call, and that would lock my price in at whatever call I buy. In this case, it's 145. I could have spent $700 and lock it at 140, or less and lock it at 150. So this makes me long Apple, but only when I want to. So I'm not obligated to buy the shares. I just bought the call. Hey, lock me in. Maybe I'll buy the shares, maybe I won't. So who's guaranteeing me this price? The seller of the call. So that's somebody shorting Apple. That's not me. Okay, so whoever sold you that call and collected your $400, they're on the hook to deliver Apple shares at 145 to you at your beck and call. So any point in time you exercise your right, you wake up and say, you know what, I won't buy Apple today. So you go and say to your broker, exercise. Then that person has to deliver on that day 100 shares at whatever price it is. Okay, so that's the concept of a call. Somebody that buys a call wants to be long, but without a big commitment out of pocket. Now, the bad thing is that it's time limit. So every day, nothing happens. It's risk that this one is going to lose value. And most options expire worthless, they tell us. That's why. You buy and you hope for a rally. Unless you have a real breakout reason, usually from the chart or from some homework you've done, and there's an event coming and you feel like a guess up is coming, then it's worth it. Otherwise, if you're just buying because you feel like it, you're going to have a lot of opportunity to whittle away premium in a bad way. You buy it and then nothing happens and you don't do anything and you don't manage that second part of the risk, and suddenly that $400 turns into 100, and then you go, oh, it's too little to buy, and then suddenly it goes to zero, you do nothing with it. So there is a risk of just buying willy-nilly. Buying leap calls, somebody says. So what's a leap call? A leap call is just a regular call, only out in time. And I'm not sure there's a definition of the number of months. Like, is February 2022 still a leap call or not? All it means is out in time. They get more expensive because there's more time on the clock. So if I were to buy a quote, a leap call, I would do it in the money, because then there's an advantage. An in the money option, meaning it's the level of call I buy is below current price. So price is already past it. It will act slightly better than one that's out here on bad days. So if the stock drops 5%, these calls will get decimated. These will get hit less hard. Because, which brings me to the most important part of all this table, the delta. The higher the delta, the more like a stock it behaves. Okay, so now that you've opened the door, thanks for that transition, by the way. So I'll go back to November. So we talked about a put, we talked about a call, and we talked about just examples of how buying a call, buying a put, selling a put, how it works. Like the buyer, what do they get? The seller, what are they committing to? But think about it. Anytime you're selling an option, you are not in control. You are committing to somebody, something. So you better make sure you do your darnest to know that you have a solid reason to do it. So I would never, ever sell a put in a stock I don't want to own, ever. because that creates me having to defend it. Okay. And I would never sell a call option naked, period. Not after last year, this year, never. Because I know people with millions of dollars, their accounts were liquidated because they were short one stock out of the blue. GME spikes, liquidation. So not worth it. I don't care how much they thought they were going to make. There is no point. Okay, I would short stocks with a bear call spread, selling a call spread, but that's limiting my maximum loss. That's okay. But selling a naked call, absolutely not for me. Absolutely not for me. Okay, so what about, I said the odds maker. I said it's printed on the table. I'm seeing questions that are involved. So it's unfair to jumping into explaining straddle and how to sell a straddle and a broken wing butterfly and all of that, because they're like 3 steps ahead. So remind me about the straddle a little bit later. I would speak to it. It's very important. I'm glad you mentioned it. It's very important. So back to the basics though. So what are these columns? I don't have many. Okay, so I'll walk you through mine and I'll focus in on the most important one, delta, for me. So I have mark. Mark is the middle between bid and ask. I don't have bid, I don't have ask. I have everybody tell me it's bid this, ask that. I don't care, because all I care about is it's going to fill, the price is going to be between bid and ask for every ticker I use, and I only use liquid tickers. So Apple will fill at whatever the middle price is, plus or minus a few pennies. So I don't care what ask is, I don't care what bid is. The mark, or sometimes they call it the mid, it's the middle between bid and ask. That's important. That's the actual price of that option. Okay. What is open interest? Open interest is, so this is today, it's the weekend. On Friday, we opened the market. These positions were there already. We had this many puts, this many puts, this many puts. That was from the action on Thursday. This is a static number. It's here and here. They don't change during the day. This is what happened on Friday. This is what happened on Friday. So Monday, this will reset to 0, and these, the open interest, will change according to what happened on Friday. So open interest shows us the positions that were there when the day started. This shows us what's happening during the day. Rinse and repeat every day. So open interest, super important. It tells you where the money is. You know how they say price is truth and all of that? So people can have opinions, but this is where they're putting their money where their mouth is or not. So you can tell when you get good at reading options, or if you're in the chat room with me, I share this information. Like before the correction happened, this most recent, I said the open interest is showing a lot of downside pressure, especially in Apple and the SPX. Guess what? Monday, boom, 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 hammering them down. So sometimes they provide warnings. Sometimes they provide clues. And I sometimes see changes overnight that say, hey, we've got something happening. Not everybody's talking about it. Maybe we have an early entry. So open interest and volume are tied together. So now we spoke about mark. We spoke about open interest and volume. Implied volatility, very important, because that provides a gauge as to how expensive this particular stock is relative to itself. So this is pretty high to normal circumstance. Apple used to run in the 20s, low 20s, but now these days, everybody's on edge, so it's close to 30. So the open interest, basically, the higher it is, the more expensive the premium is. So if for whatever reason, there is like an event in Apple, like earnings, this will jump, maybe double, okay? So then what do I know from that? I know that if I buy a put or a call for that particular week where this implied volatility is high, I'm overpaying. And if I did it in option, let's say this was a reporting earnings week for, okay, perfect. Let me jump in. I think JP Morgan reports this week. So let's see here. Implied volatility, nope, this week. Implied volatility is in the 30s, high 20s. Wow, this is a quiet stock. Okay, so it's slightly lower here. So you can see, let me see. So this usually, if this is not a bank, this difference of implied volatility during earnings week would be bigger. Like any tech stock, this will be up here, meaning incredibly high implied volatility for the week. Maybe Goldman Sachs will give us that because it too reports this week and it's more of a trading stock. Nope, still boring. Pizza, DPZ, is it? Domino's reports? I'm trying to visually show you the difference. There we go. All right. So this is a stock that reports earnings this coming week, which is October right here. So its implied volatility is almost 60. I'm rounding. The further out away from that event earnings, it not only drops, it goes back to the normal, which is the hashed lines. So you can see how if I buy a call just for that event, as soon as that event is gone, that premium is going to get cut 20 points. That's a huge drop just from that event. So I better guess super right. And I would not buy calls or puts for that event. I would buy them out in time so I don't pay that extra premium. Or buy them out in time and sell something against them shorter term, but that gets complicated. But this is a visual representation how events inflate things. So implied volatility is important to watch only relative to itself. Like, is this the normal goal or not? So how do I know? It's showing 60. If I didn't have that table, some platform don't provide that table. If I go out to November and it's 30, so now I know I'm paying double as much. Why am I paying 60 IV implied volatility versus a normal of 30, right? So you know you're overpaying. So that's the implied volatility part, okay? Now, I haven't talked about my favorite part, so let's go back to Apple. The odds maker, which is this guy, the delta. That's the most important column here from management perspective. Okay, so the delta, the simplest way of doing it, anything around current price. So current price is 143, somewhere around here where the color changes. The delta should be around 50, 0.5, and it's negative 0.5, so ignore the negative, 0.5. What does that mean? Think about it as a coin flip. When you buy shares of a stock, it could go up, it can go down. When you're buying a call or a put at the money, same thing. You've got 50-50, just like buying shares or shorting the stock outright. If I buy a call, it's just like buying shares. If I buy a put, shorting the stock, I'm just like buying shares, shorting the stock outright. It can go up and could go down. I don't have a mathematical edge from that. It's the coin flip. To me, that's the zero base. So if I'm buying a call to say the stock is going to go up, the lower that number is, the more hopium I have. Like I'm being unrealistic. Like this expires in 5 days, Friday. So if I buy a 149 call, the market right now is telling me I have very little chance of winning. That's a very low number. So you find your balance over time. If I'm buying calls, I want to be somewhere around like 0.3 between these two, above 0.3, below 0.4, maybe 0.28 or higher would be acceptable. So that's like a sweet spot for me. And I don't like to buy 1 week. I like to go out in time, have like 3-4 weeks on the clock at least. Depends on the thesis, but in general, I rarely do same week like that unless I have a specific reason. So in general terms, if I'm buying an option, I need to be realistic. Otherwise, I not only have to guess correctly with direction up, but I have to correctly determine the amplitude, how big of a move. So wouldn't it be so frustrating to guess up and buy something that has little chance of hitting and then see the stock come up and dive just before it hits mine? So very frustrating, right? So give myself some realism by choosing something realistic here. Same concept here. Look, the furthest I go from the current price, the delta drops to low. Like it's telling me there's very little chance Apple is going to be at 136 or below. So that's my odds maker, the delta. So now I'm saying I want high numbers when I'm buying, right? So I like to sell options for a living, which means I'd be selling stuff up here. So this is where you eventually find yourself a place that's you're comfortable shorting options to create income. So the delta is reliable in the sense, William asks a good question. Is it reliable? That doesn't tell you what's going to happen. It tells you what's priced in. So if nothing happens, like no crash, no pandemic, this will play out to the odds it's showing. But if, quote, something happens, then you might have to manage your position. So let me give you a tangible example. Part of the chat room, for example, I share in the chat room once a week on Friday, mid-afternoon, a video and a table for iron condors. Let me see if I can bring one up. Actually, I can't. Well, maybe. Give me a second. Let me talk about it first. So you've heard the term iron condor. Iron condor is fancy words for saying, I'm going to short and go along the market and range bound it. I think nothing's going to happen. I think they're going to ping pong between what's already happened. And therefore, I can make some money just from the price action, nothing happening. So the last 3 weeks, how violent you felt them being. The last 3 weeks in the stock market, you felt them being violent. So the benefit of us being in the chat room trading together is that we can sit and say, calm down, let's recap that nothing has happened. So I shared the 3 winning sets of iron condors in the chat room. And I said, if you want to think about it the silly way, the last 3 weeks were so violent in the stock market that we should have lost on one side or the other. But all the put spreads, all the sold put spreads won, all the sold call spreads won, which means price stayed in between everything for everything. So how could that happen if it was so violent? It wasn't. It was whipsaw. Perception was negative, which in my opinion gives the advantage to the bulls, because the price action is still bullish. Sentiment is horribly bruised. Sentiment, not facts. So anyway, the luckily for the chat room, having the chat room keeps us all sane. Like I may lose track of something. Somebody trues me up. Hey, but Nick, you're not considering this, and vice versa. When everybody's consumed, like, hey, I heard about some regulatory thing coming from the White House on crypto. It's like, who cares? The White House cannot change the popularity of crypto. So the chat room is open all day. Yes, somebody's asking. All day, every day. In fact,
really quick here, because we're getting a lot of questions here. I just want to make sure that we can, take care of this so that we can get back to it. So quick question here. Is the price for one training or lifetime enrollment? So today we're doing full year. So this is for the year. It's an annual subscription, Nic's options trading chat room. So you keep the discount as well. Somebody else was asking after the year, what is the price per year? Will we have direct contact to ask questions, trading together? So yes, it is a lifetime discount. So that means that as you renew and continue to trade with Nic, you keep the discount, even if the price goes back up to the original price, 6,000 around there. So you guys are getting it today. It's a special we're doing until midnight, and we're all trading together in the chat room. Nic actually just got back Nic just got back from the session. But yeah, it's the options inner circle, Nic.
okay.
It's just the chat room. And basically that's really where we spend the whole day. Nic is there. He just posted a video from today's session. And in that session there, you can see he's posting videos, educational videos as well, because we do have people that are very new with options. We have a lot of people that are experienced as well, that have been doing it for 20 years. So it's all levels, but just because you've been doing this for 30 years doesn't mean you've been making money for 30 years. So it's every day. Yes, Williams, the chat room is every day. We actually meet on Sundays. Actually, Nic I
just wrapped it up. I think what you're trying to say, Rodrigo's under the weather, so kudos to Rodrigo for hanging in there with it. Harvey also as well in the background. So so every Sunday I have a charting session where I get requests from everybody in the chat room, and today's was 83, I think, tickers, maybe a couple more. So I do it, I record it, and I share it, and then people can follow up throughout the week. So throughout the day, I try not to, but I do share fast trades, because it turns out that some of these people in there are actually fast traders. So you will see a 5-minute chart on the SPX and a 1-minute chart on the SPX with a specific visual and target. And those yielded profits this Friday, this whole week, was incredible for these moments for somebody that can trade fast. But the goal is not just that. The goal is for us to debate whether, for example, Zoom is a good knife to catch and have some sort of a slower swing trade. I'm a slowpoke because I'm busy throughout the day doing all this stuff. It's a lot of work. So I will make mistakes in the short term. I would prefer something longer term. So the conversation centered around, okay, so is Clover opportunity real? And by the way, we caught a huge spike in Clover on Friday. But that's not the goal, but it does happen. So if you pay attention, you could probably get one of these or two of these a week. But the goal is to find out, how can I trade this, whatever stock, long term? Like this one, for example, whatever this is, Square. So somebody's asking me, what do I think of Square? So I draw it, and then I tell you exactly what I think of it. So it's falling into support. So I would hold it long, but I would beware of resistance above, because I don't want it to fade and come back here and test the X. And if they lose X, I will have the chance to buy it at or below 200. So that would be the conversation that goes in there, so nobody makes a mistake. Here are the Iron Condor videos, by the way, and that's the table I was trying to get to earlier. So the Iron Condor has, I don't know, sets of different time frames, something for everyone, and the video itself was about 15 minutes explaining what they are. AMD trades. So that's the goal. Let's find opportunities longer term. But the most important part is to not trade alone. Like this one is about fear. I show the last couple of weeks worth of the VIX. Okay, the VIX is coming back to here. It could take a tumble. So we'll see what happens at 17.63. So we keep track of everything. Somebody's saying Las Vegas. And if I make a comment, somebody may jump in and say, you know what? Las Vegas has issues because somebody reminded me that it's the Macau issue that Las Vegas is selling over. And then I said, look at this line. I mean, that is a trigger and a half, really. So I would put an alert there and wait and see if they can pop up there. But it's a must that they hold here. And somebody jumped in and said, be careful, there's some Macau issues. So they reminded me of that fact. So sometimes I make mistakes and somebody sets me straight. Like this is a conversation of top level weekly small cap chart. And in the video, the weekly recap video, which I will have out by the end of today, will point out to the fact that for months, the small caps have been stuck in a pinpoint place, and now they're tightening it up. Something is going to give, and this is where the clues for the S&P will happen, right here. Something else that you will get is a daily plan. Every day before the day starts, I lay out all the charts for the ETFs for the market and the futures contracts with a blurb of what they expect. So it will, with lines, like we will have support here, we will have resistance here, so that everybody goes into the day, whoever's trading actively during the day, will have a roadmap of sorts, at least my opinion of a roadmap. And I'm pretty good with charts. And it's usually plain, simple English charts. Let me see if I can show you one. So if I go to the SPY, I'll show you. I'll go down to 120 so I don't scare anybody with the lines. So plenty of lines because these are short-term daily guides. For the last few days, important level 436. That was a breakout to get us to 446 not too long ago. And now it's in contention. We jumped over it. So now it becomes the support below. So going into 436 should be support. That will be my comments on Monday morning. And then the opportunity is if it goes above 442, I should chase it up. So the buyers will be in charge. That type of comments. Wednesday's pivot. So short-term comments to guide us throughout the day. Same for the QQQ, similar lines. It's a roadmap. I use it for myself. Look how stable the IWM was. 2,000 stocks right there. So
that's every day, right?
Every day. Once in the morning, you pop in, even if you don't have time to be in the chat room. You just pop in the morning and say, you look at the day's plan. And then you pop in the middle of the day. Hey, what did I miss? Anything good?
Oh, and the Sunday sessions, like where it's
Oh,
just for chat members.
yeah. The Sunday sessions will be like anybody can, you can request whatever ticker you want and discuss it in the session itself.
Mm-hmm. Oh, really quick, just want to give a shout out here to our newest member that just joined the family, Timothy. Shout out.
Beep, 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 beep. So, the group is growing steadily, and I don't see many people dropping out because there's value. There's value in trading in groups. The more minds together, the fewer mistakes. Like I would stop everybody going long a ticker like this without knowing that they're stepping into a potential buzzsaw. So the easiest way to say it is like going here. Hey, how do you think how would you like going long the IWM? I would say, you know what, this is not an obvious point of entry because of this, but I would chase it above that. So that type of reminder. Interpret the charts. Well, Yemi, that's why you don't have to know it. I will put it in plain, simple English. Usually I'll share the chart as a visual for you to learn over time. But I can tell you in plain, simple English, like if you come to me here, I'll share this chart and I'll say, going into 229, it's not an obvious point of entry. I would wait for them to get above 230 for that to be a viable chasing the rally. So what is my success rate? In what? Per trade? First of all, if you're looking at this as a trade alert, I think you're missing the point of it, which is an education slash pals to trade with for a whole year. But I can tell you with confidence. So let me show you something before I tell you. Every trade setup I share has a full video with it, 15 minutes usually. Excuse me, 1 second. Getting over something here. Don't know what it is, but it's persistent.
Yeah, shout out to Yemi. He's an actual member of the Options Inner Circle, Nick. Yeah, I've been talking to him for a couple of weeks. He definitely, you see, we have people from all levels here. So
actually,
yeah.
Yeah, so I'll show you what the format is, and you determine what's a good success rate. So I say success if I provide a trade that provides 15% or 20, 25%, and somebody doesn't book it, and it goes back to a loss after that. So to me, it's a win. So with options, every trade I share, almost every trade, has 4 different ways of doing things. Now let's go with Nike. 2 that buy stuff, debit call spread. So I'm buying options. So these need a rally. I'll say faster setup, slower setup. These 2 involve selling stuff. Don't get bogged down in the nitty gritty. None of this is actual trading opinions right here for you right now because we have to take context. So the selling part, they don't require rally. So these 2 are winners already. And these 2 are winners too. So this one is up from 470 to 720. So somebody almost doubled their money here. And somebody here almost doubled their money. But if they don't book it, it goes back to 0 and that happens, then it's on them. So you ask me, what's my success rate? I deliver profits in almost all trades, and almost all credit spreads win. Very few that actually get blown up as far as credit spreads. So pretty high. I'm going to say 85 to 88% success rate on the sold stuff. And almost all the debit stuff offer profits from 15 to 25%. So it's up to you to take the profits or not. So yeah, and, I don't say this is the time to exit, because who am I to know your portfolio? Every person and every portfolio has different risk tolerances and different balance. So what's appropriate for me to close is not appropriate for somebody, may not be appropriate for somebody else.
Hey, Nick, Cypher here, an actual member. Just want to read his comment here.
Because I know Cypher.
Yeah, me too. Cypher is saying, I'm a part of the inner circle, and it's great because trading with someone who you can bounce ideas off is very powerful. Just my experience.
That's perfect.
That's exactly what it is. If you are new and you want to bounce off your strategy off of Nick, if you want to bring a ticker to Nick so that he can do his review, his analysis, even the advanced traders, they always bounce off ideas from Nick, because at the end of the day, we're all here to learn. It's a great community. It's a great environment so that you stop trading alone. You start trading with a community that is actually has your best interest at heart. And this is not like one of these other chat rooms like Reddit or these pump and dump chat rooms. Everybody in this chat is a verified trader, a verified options member here of Benzinga. So even if, like Nick said, even if you work 9 to 5, you can still and get value out of the chat by popping in the morning or by going in the sessions on Sundays where we meet, we adjust the portfolio, we digest the news, and all that stuff.
So somebody's asking, two people are asking, Yemi is asking, can be more specific. This is, so the video is 15 minutes long. It starts with the macroeconomic conditions. Second, the microeconomic conditions for that particular company. How's it doing? The P&L stuff. Then the reason why, the thesis, why am I taking this trade? And then I'll share leg by leg and put it in the table. This table will be available as to what leg to sell, what leg to buy. Sold leg, bought leg, expiration date, amount of premium I paid, or it was at the time I did it, and the statistics. Remember the delta I said super important? There it is. We'll get to technicals in a second. So let me offer you one example. These are actual trades by date. This is my actual worksheet. Okay, so one of them, actually, I have 3 of these for different groups, but you get to see all of them. So here's Apple on 9:30, whatever the price was doing, it was 142.9. Right? I shared a long Apple trade. So currently the price is lower. So let's review what happened, why I like to sell options and not buy them. So the buying a naked call is now losing a little bit of money. So that's one thing. At one point it was a little bit higher, but if somebody didn't book it and scalp 5%, they're now down a little bit. Buying a call spread is about even. Okay, that was up about 12% at one point, but if they didn't book it, they're about even. Somebody that sold a naked put, which is also a bullish. All these are bullish, by the way. These are the same thesis, different ways of doing them. If somebody wanted sold a put, they're now almost at maximum gains. They collected $1.24 and now worth 16 cents. So whoever bought that put from them lost money. They won. Somebody sold that put spread. They are now at close to, I don't know, air math. What is that? 60, 70% of maximum gains, actually more. So they're winning too. So 2 positions are stalled or slightly down. 2 positions are total winners almost. On the same day, on the same trade setup, different methods, buying stuff and selling stuff. All 4 done at the same time yield tremendously different results. So this is where this proof that I like to sell, it's more forgiving if I know what I'm doing. So this is a big if. So if somebody's willy-nilly, then they're going to be at a disadvantage. I caught Disney, I forget why it fell, but I did a trade almost similar. Look, it was 176, it's now lower. And look, if somebody sold puts, they're making money. If somebody sold put spreads, they're not losing money. I'm fighting a sneeze, I'm sorry. So if somebody bought calls, they're slightly green. That's strange. They must have had an increase in implied volatility, which happens. Same with this. That's a strange setup there. Strange situation. I should double check those facts. At one point, the Disney call yielded 35% in between 10.5 and today on Friday. So we definitely got a favorable move. Intel, it's still work in progress. It's still where it is. IBB, that was a thesis where I said, I'm catching a falling knife based on specific things I shared. I said it would be the choice between IBB and the XLV because one is a biotech and the other one is a healthcare ETF. Turns out I chose the wrong one. I chose the IBB, and guess what happened the next day? Moderna got hit 10% or 8%. And Moderna is heavyweight of the IBB, not the XLV. But guess what? It's still a positive trade on both counts. So yes, there are specific actionable lines. There's a date, a ticker, a current price, situation, debit call spread, credit put spread, and specific legs to buy and to sell, and specific statistics and theoretical chance of success. So if that's not specific enough, I mean, I can't jump through the computer to push the buttons for you, but I do provide all the information that are necessary to do it. And this is where you make it or break it right here, the delta. If somebody doesn't have this in their table, they're winging it. They're not going to be successful in options. This is the most important part of once you determine that I want to do this or that, if you're not looking at your delta, then you're just winging it. What else are you looking at? So when I'm a seller, so every credit, every C is credit. Every credit put spread, credit puts, I want as low a delta as possible, under 0.15. That's what I'm looking for. Single digits are great. In the call side, I'm always at a relatively high one. So I don't really pay attention to it because I always default to the high one. All right, so this is it as far as the trade table setups. Very detailed. Plus, you can jump into the chat room and say, I don't get it. I watched the video. What are you saying? What? We can discuss it. That's what happens in the chat room. So we will go back and forth until you get it.
Let's give everybody a little taste of what Nic does every day. So, all right, guys, this is your favorite part of the session. I know because it's mine. We are going to go over live tickers here with Nic. So go ahead and drop your tickers on the Zoom conference.
And if you put caps and start saying this, I will ignore it.
No spamming. One ticker per person. Okay, choose your pick wisely.
Okay, alarm. Wow. Okay, so we'll go with I have a quiz for you. BRK.B. So this is Berkshire Hathaway. The B. .B. Did you know that it's the biggest component of our bank ETF? The XLF, this is the biggest component, not JP Morgan. That's pretty crazy to me. So this is not an obvious entry point for BRK.B. Why? Because technically speaking, this is a crash scene. That was an accident scene and they just got back to it. So onus is on the bulls to show me they can overcome it. I think the risk extends through $286 per share. Okay, I saw Peloton up there.
Yeah, I'll help you out with that stuff.
Huh?
Yeah, I'll help you out. I think it's Peloton. Yeah, Peloton is after. Yeah, by Josh Inglis.
Yeah, so Josh, Peloton, they needed to hold here. I said hold here or new leg lower coming. And look, they came to that new leg lower. So same exact comments I will do here. So hold. So this is a buyable dip. And the caveat is I stop out. Because if this fails, they're going to take another leg lower. So headline specific company, I've been long it before successfully, and but I did have hard stop outs. So now it's in the headlines sphere, so I'm less excited about it. But it is tradable, and expect a lot of sellers from 96 on up. So if you're lucky enough for them to get to 95 or 96, if it was a trade, I would start booking or locking. Or if the bounce to 96 or 100 gets me out of trouble, I should take it.
Okay. All right. Then we have SLI by Tushar Patel.
Okay. I don't know this company. So just from the standpoint of looking at this price action, this matters. This matters. So will this. So anything above 8 is a challenge per the chart itself. So it could spike, but remember that the last 3 times it got above 8, it got smacked hard. The good thing is that it's making progress, higher lows, and they're attacking a failure level. So it's not a bad long as long as 7 holds, maybe 7.4.
Okay, then we have BAC by Nazanin Leela.
Okay, so BAC is going into a coin flip. I don't like it going into the earnings. I don't like bank valuations at these levels. They're not expensive. They're expensive relative to themselves. Look, I've shorted banks on every pop successfully. I'm not short banks right now. I would not trade them into the earnings because it's a coin flip. But if you do twist my arm, I would take a bearish position on it. Not because I know something you don't, because I'm guessing, same as you. This week is all about guesswork for the banks. But here's the thing. So you get a free pass by looking at what happens to JP Morgan. They report first, and a couple of days later, I think Bank of America. So that's like a peekaboo for Bank of America shareholders. So if I wanted to buy a call to bet up on JP Morgan, I would use Bank of America stock because they will both rally in the same direction, up or down. But remember the implied volatility on Tuesday morning, I think when it reports to JP Morgan, if I bought a call in JP Morgan, the premiums will disappear versus the Bank of America ones will hold up because its earnings event is not until later. So a dip into 42.5 would be an attractive buying spot versus chasing it. That was a pretty sharp reversal. Or, a breakout from 45 brings it open air. Now, I can't remember. Oh, this is not an all-time high. So that's something to consider. The 2008 debacle. I hate it that it's going into that. Just be careful. It's far back, but it's still there.
Okay. All right. And then we have a GE by Mr. Bill.
GE came up in the chat room today. I love it right here because it has a good base. Look at that sharp trigger line right above current price. I think the least bit of excitement in the overall market, if GE can clear this, look at this volume bar right there. This is a daily chart. Look how tightly it's been trading for months right here. And it's on the upper ends of it. If you clear that, gone. I don't think these two will stop it. But let's say step one, get long anticipating this, or on a breakout of this would be even better. And step two, the battle will be here. I'll book some and re-engage above that because check this out. Look at the upside potential if they can clear out of this one. This will be some sort of a cup and handle. This is a monthly chart. So every tick is 1 month. So don't get excited by seeing one tick above there. That's a whole month. So what happens is you can say it took a beating and now they're taking a faster recovery from said beating. So if you come back to here and the bulls take a break out of it and establish it for fitting, chances are they bum rush the bears. So this is going to be a tough slog up here. So it's not like going to immediately price out the whole thing. But technically, 180 to 160 is doable, provided two things happen. One, the breakout right here, that little breakout first, and then the second breakout. This is a place to get out, anything around 150. Now, remember, this is a reverse split stock. So the values are really like, 13-ish, just for, I don't know why they reverse split it. Is it? How about this? What if it's getting ready to get back into the Dow or something? I'm not sure. But trigger 1, 108. Trigger 2, 115 and change. If somebody gets long in advance, the options are cheap. I would do it way out in time. In fact, I have an asterisk to myself to see if I wanted to do it. So let me share something with you. Okay. So here, I'm going to take a timeout. What's wrong with taking a long-term trade on January? Is this GE? What's so expensive? Gosh, dang it. You see what they did? So the options used to be dirt cheap when it was $10. It used to be pennies to get long the stock. Now you have to spend $700 freaking dollars to get long one call. See, that reverse split makes no sense. Why did they do that? I don't know. They weren't in danger. They were making progress. They weren't in danger of getting delisted. God, awful. Okay, so if I buy a call, it's going to cost me $700. I would buy a call spread. So there we go. How is that different? So if I buy one call, then that puts me long for 103 days at 105. I pay $700 for it. So what happens in real life? GE pops, that 700 turns into 1,300, 1,700, I don't know, however high it goes. So I don't have shares. I don't have to buy shares. All I have to do is sell this for whatever value it is, and I'll pocket the difference. Or I can just keep it and turn it into shares, but it's $700. So if GE falls, I'm going to immediately lose 10, 15% of it. And so how do I moderate that risk? I turn it into a spread. What does that mean? I buy something, I sell something. I'm literally spreading the risk. I buy something, I spend $700. I sell something, I collect $200. Wherever, I can sell whichever one of these. So if I said this one, I'll collect $200. So suddenly now my entry cost is $500. I'm paying 700, I'm collecting 200, it's 500. So what does that mean? It means I'm long GE, but not indefinitely. So my best case scenario is for price to rally through both. And then I end up with a a $15 wide spread that I paid only 500 for it. So the 500 turns into $1,500, a triple, not too shabby. So that would be the a mild way of getting long GE. So I just showed you a trade setup. Aggressive by buying a naked call. That's aggressive. Less aggressive by buying a call spread. It could be $5 wide, I spent $200. It could be $15 wide, I spent $400, $500. Okay, so that's two ways. What's the third way? Let's say, you know what? I would love to own GE at 85. Then, okay, I can sell a put at 185. Did you hear first part though? I would love to own GE at 85. Let's see where 85 is. Right here. So would you like to get paid to own GE down here? Maybe. If so, that's the put to sell. This has no out-of-pocket expense. Money goes into my account. What if you say, hey, I don't want to own it. I want to trade that opportunity. Okay, then I'll sell a put spread instead, and I would make it look like this. I sell the put, I collect $1.50, I give back $1 of it. So I keep 50 cents. So now I've limited my maximum loss to $4.50. So that's about an 11% yield on risk with about an 87% chance of success. What does that mean? There's very little chance that 13% chance-ish that GE stock will be at or lower than 85 in the next 103 days. That's based on the odds currently. So if the markets crash, everything changes. But if nothing happens, if just the normal price action happens, those are the statistics. That's a viable bet. What if I really love GE? Then I can do both. I can sell the put spread and buy the call spread or buy calls. So I can do something like this. So I sell a put spread and I buy a call spread. So now the out of pocket is smaller. Let me see here. Did I do it wrong? No. Okay. So I lowered my entry cost by 50 cents because I sold this. So whatever this cost is now lower. What if I wanted to own shares? So I take this side and now I really lowered my entry cost to 340. So now I'm long this way and I'm long that way. So here's what I do usually. If I wanted to own 200 shares of GE, I would buy one of these and sell one of these. This way, I'm long 200 shares of GE two different ways. One needs a rally to win. One does not. In fact, can withstand a drop to win. So that would be a viable scenario for somebody that wants to buy shares and wants to collect on some upside hopium. So this would be a video on GE that I just did. And I would have to say, okay, GE fundamentals, this and that, and this and that. They're on the right track, but they're not there yet. They have 4 focused venues of business. I think renewable energy, healthcare, and I forgot what the other 2. Fintech, is it? Oh, it's aerospace and aviation, not aerospace, aviation. And I'm going to say fintech. I can't remember the 4th one, but they have focused efforts unlike before everywhere. So that's GE. Thank you for asking about GE because now it showed what happens every day in the chat room. Somebody asked me like this, I'll go with that and I'll share it.
Yeah, and this happens every day. And we're going to get back to the tickers here in a minute, guys. William Bubba wrote,
thanks William.
Nick. Thanks, Nick and Rodrigo. Great presentation. I'm in. Welcome to the family, William. Welcome, welcome, welcome.
And by the way, in the chat room, I have a few people that are like unofficial helpers, where if somebody asks a question and I was too slow to answer for one reason or another, doing homework or doing a video, I go back and somebody's asked and I go to answer and I look up and somebody had already answered. Like if it's something systemic that they see, hey, where can I find this or where can I find that? Somebody jumps in and says, hey, this is what he said. And here's the link to the video. So it's pretty cool.
Great environment. It's a great environment for people to learn.
Hey, I will never go back to trading alone. So if you don't join this group, find a group that works for you because it is a mistake to be trading alone. Wall Street cheats. They cheat. They rig the game because they make the rules. So one day you think you got a handle on things, and then suddenly you learn something new. Well, with having hundreds of people in there, chances are somebody's seen that scenario. So
Yeah, and I just do want to mention here, guys. Obviously, we're doing options trading here because we want to be successful, profitable options traders. We want to be consistent with our gains. We're not trying to get lotto tickets. We're looking for consistent capital account growth. A lot of people that really want to make income, really want to make revenue, and they join this chat room because we're pretty serious about that. So take it, like a career because that's what it is, right? This is something that people live off and successfully do that. So being able to take it seriously, and not just that, but having the mentor, having Nic Chahine there all day, going over picks, strategies, giving you feedback on your own strategies and such. It's very helpful because it's somebody that has your best interest at heart. It's not like these pumping up chat rooms out there. It really is a group. We're a strong, solid community, and we do our own research. We have our own approach when it comes to what Nic does, and that's good because if you're just trading the headlines, if you're just trading whatever you see on CNBC, that's too late. That's why retail always ends up holding the bag. So
Yeah.
what we're doing here is to give you guys education so that you don't fall into the emotional trading.
So a couple of things to note that I benefit from in the chat room. First of all, the watch list is huge because it's mine, yours, his, hers, hundreds of people in there. So chances are the ticker is covered. So that's for starters. And I don't listen to any news, zero. The way I get my headlines is through Twitter on my phone, and I just read the headline, bullshit, excuse my French, BS, 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 BS. Very rarely do I actually click on things. The only reason I do this, because I want to know what the talking points are. I used to watch CNBC for that, but I've cut them off over a year now, I think over a year. Anyway, happiest day of my life. Wapner and I got into it in social media, and then he told me to stop watching. So I said, okay. And I stopped watching. So that was it. You don't need it. Trust me, without FOMO, you make fewer mistakes. So FOMO works both ways. And let me explain it to you. It works, it's human nature. So it's not like you're a bad trader. When we see something rallying, our initial reaction is to chase it. And most often we chase it so late that we end up holding the bag. But that's our nature. So if you see a herd of people running out of a forest, I keep using that, like out in the bush, you're not going to run into the forest to find out what they're running from. You're going to turn around and book it because safety, that's an instinct to keep you alive. Well, that is horrible for Wall Street. You have to fight it, and you have to go in and see what's chasing them. So then you find whether it's worth the opportunity to catch that falling knife or not. My favorite trades are great stocks that are falling out of bed for no freaking reason, like Palantir. Okay, so if Palantir is falling out of bed, at some point, there's going to be enough capitulation. So I remember selling $18 puts in Palantir. Gladly, I would do it again. I did it again here. I will do it again if things get worse here, because I know they have a 1.4 billion run rate, and then recently they won a contract of sort and they went to the moon. And then somebody said, I love Palantir. In the chat room, I guarantee you more than 10 people said, hey, how about Palantir? You want to chase it? I was like, not into 30. Above 30, yes. But into 30, the price action tells me it has sellers and they're strong. I don't want to fight them. I will chase it above it. And if I'm not long yet, it's too late. So somebody that chased it out of, it's going to the moon, I'm going to miss it. So what? So what? You'll catch it next time because they will hate it again at some point.
That's the discipline. That's really what I enjoy a lot, and I value so much from you, Nic, because like as an options trader myself, we don't catch ourselves too often until things go the wrong way, and that's always when we're doing just buying the calls and just buying the puts, just the volatility, which that's really what you're in for if you're only doing that. But I do like your strategy with the credit put spreads because it definitely, we're looking for consistency, right? That's what it's about.
Yeah. So let me tell you the visual. Somebody just in there, who was it? Jason Hopper. So thanks for mentioning Microsoft. So let's put this idea. So Jason pops in there. Hey, I'm trading Microsoft. Let's say this is Monday and things are popping, and he's trading Microsoft. Can I chase it? Like, well, it depends on how fast of a trader you are. If you can chase a breakout from here and book it here, yes, okay. If not, you should wait for a dip into here where it will have support below 292. what I fear is that this is so-called overhead supply. So this is resistance. So this is a ledge and overhead supply. So if I can scalp from here to here, sure. But what if I was slower trader and I still wanted to trade it somewhat actively that week? Well, if I can find a credit put spread to sell here, I would. That would be the active way of not chasing upside and not needing an upside. And in fact, can fall into here and I still can win. So I don't know how, I forgot his name, Jason trades. So in the chat room, I guarantee you that there are equity only traders, there are some futures only traders, and there are some options only traders. And that means that the coverage, the content is viable for all of them. So meaning whatever you want is happening, because there are no other ways of trading equities other than what I just mentioned. So if you're not an options expert, that doesn't mean you don't belong. It just means you have to find a way to make it work for you with my help. So you come to me saying, you're making all these comments and I get it. I just can't put it to work. Help me put it to work the way I trade, and here's how I trade. I've done that before. I have people that came to me and said, I only do equities 6 months out. So now every time I make a comment, I make sure to include that style of people.
Yeah, and this is for a lot of different types of traders. More importantly, we're looking here for consistency, guys. We're not trying to do these YOLO plays out there. If we do anything like catch a falling knife, I know we did that. We had a lot of successful trades, but that Pinterest was one of those. But more importantly, guys, I do want you to look at the big picture here. Education is a lifelong process. So, that is what it's about, making it a habit, right? Making sure that you're actually taking it seriously, because if you're talking about money, you can't make it a hobby. It has to be like, you need to put a little bit more effort into it.
So you mentioned Pinterest. I clearly have traded it before, and it's falling on an improving P&L. So it doesn't make sense how they punished it on earnings harshly. So I caught the falling knife. And I had stop out level 1, stop out level 2. And I said, this would be the credit put spread I sell, and this would be the debit call spread I buy. Clearly, somebody who hung on for the debit call spread, if indeed this was the one here. I can't remember the last Pinterest. I can go in there in a second. But the credit put spread is still alive. All they need is for it to die above 47.50. And whatever pressure it's under will be fine. So now it's inching back into another earnings report. So the earnings reaction is completely binary, meaning we don't know what they're saying. Look, up, down. Let's see here. Down, up, then down, down. We don't know what the next one's going to be. So I know that there's support from levels. I know that there's a descending trend, but the facts don't support the descending trend unless somebody knows something we don't. So the video on Pinterest could be pretty interesting next time.
Yeah, and yeah, go ahead, Nick.
No, if it, stop out level 1, if somebody didn't stop out yet and they don't stop out when it loses 49, that means they have no discipline to stop out. Like there's a little gap here, but not every gap fills, but that's pretty darn close in my opinion. Eventually, maybe it fills, maybe it doesn't, but I think it's a tradable bounce. But look how consistent the seller has been. So job 1 is for the bulls to hold levels. So stop making lower lows. So this is a falling knife. Look, falling knife, lower lows, lower highs. Step 1 is stop making lower lows. So if this is wrong, then the knife is still a machete falling. I don't want to pick it up. Pick it up off the ground. Let it hit the ground. Have a double bottom at least. Lower highs are fine. And then they come to a point. So the way a chart stops reverses. Job 1, stop making lows. This is okay. So if you stop making lows, you come against here, you're still making lower highs. That's fine. So now the range went from this wide into a pinpoint. Guess what? There's a moment of truth here. Pop and start tackling levels one at a time to build an ascending trend. That's how it happens. You set a floor and then you start building ascending trend by beating levels that mattered on the way down, or capitulate. And the target usually will be, in this case, we won't talk about them, but stop out so you don't find out how low it can go, and retry longs down here. See that? So all this is in the video.
In the chat
So,
room.
yeah, in the chat room. And you can, mark the video and watch it over and over and over again.
Okay, now question for you, Nick. So, overall market perspective, global market. What's your take on
Okay.
the Evergrande situation in China? How do you think this can impact the U.S. stock market? Is it in your radar? Where is
So,
this within the
yeah,
community of
it's
what we're
not in
doing?
my radar because so they keep saying this is a Lehman moment for China. I freaking doubt it. If that's the case, the Chinese economy pivoting on 150 billion worth of debt is the fear. Anyway, we've seen this movie before. So the Lehman moment was different. First of all, it hadn't happened in recent history, and it was not specific to Lehman. In this case, my take on it, I'm not an expert on Chinese equities or Chinese infrastructure, but I think it's a whole bunch of people made a bunch of bad debt, lent bad, and they're going to have to pay. And if the bill, I keep reading 150 billion, 200 billion, it's a sneeze. We spent $7 trillion here. Do you know what $1 trillion is? If we spend $1 million a day, it would take 2,740 years to spend 1 trillion. We spent 7 of those this year. 150 billion in debt from China. If it breaks the world, then we are just morons altogether. So there's no way this is going to happen. My take on it. So it's not an issue. It's a headline talking piece, and it creates fear. We bought the dip off of it and made money. When everybody's saying we're falling because of Evergrande, I said, well, according to my very limited knowledge of the inner workings of the Chinese financial system, don't tell Jack Ma I said that, there shouldn't be repercussions except to those who lent them money. It's not like Goldman Sachs is leveraged 15 billion, $30 trillion, whatever, because they lent them money. Our banks are under extreme scrutiny, and they've never had more cash. That's the problem with the banks. That's why they do these reverse repo, whatever, overnight with $1.5 trillion with the Fed. They've never had more cash. How is that a problem? So there is no balance sheet problem. The 2008 scenario was a balance sheet problem. Banks went broke because they needed cash they didn't have. This is not the case. But hey, I could be surprised. But here's the other thing that's on the table, the taper. So everybody's worried about the taper. Well, I'm not a fan of Powell because he's not an economist, and he's testing a whole bunch of new things with the world economy. So he's treating it like Wall Street. But this last meeting, he kind of provided some insight that was pretty interesting. At first, I was pissed. I was like, what is he, a moron? But I think he's a genius because he laid out the worst case scenario for the taper without saying it. So he said, I'm not going to say when we're going to do the taper. And then in the question of answer, somebody asked him, well, it's going to end the middle of next year. Look, wait, you didn't even announce its beginning. So now you're saying when it's going to end. So we now know when the taper will happen this year, and it will end in the middle of next year. So now the worst case scenario for the taper is priced in. Any deviation from news is going to be better for stocks. Either delay of the taper, eliminating it, or whatever. So, but now the focus shifts on rate hikes. The jobs number was hideous on Friday from that standpoint, because the jobless rate dropped because of participation dropping, which means that forces the talks of higher rates sooner, but stocks rallied. So crazy market, but don't listen to the headlines, just form your own opinions.
Okay. Now, what is your take? I know that you've had a very well-known trade here with the TLT. What is your take on treasuries and all that market now?
So the rate hike conversation affects the TLT. The concept is when the jobs report came out, the reaction was wrong. So yield should have spiked, and I think they finally did. Let's see, Friday. When was the report? Yeah, so that happened, but then some other things didn't work. So a tightening cycle, like a rate hike, should have a strength in the dollar as well. So gold and silver should have dropped. They did, and then recovered. So the market is trying to determine. So for me, I just bring it down to the charts. if you tell me this is a chart of the TLT, so if rate hikes are in, this should fall and should continue falling. But in this case, I would think it's closer to a bottom. So if I'm not long the TLT, it's worth catching it first against this level from a chart perspective. This is a buyable dip for this chart, TLT, BLT, whatever it is. It should find support into 140. Now, the second part is TINA. What? TINA is the acronym that says there is no alternative. So this is where the catch-22, where I don't think yields can go too far. So they say yields are going to go. CNBC will have a segment. Oh my God, it's going to get to 1.8. Maybe it did already. I don't know. I'll check in a second. But they had the same conversation in February, and it was 3. The 1.8, it was 3 then. Okay. So here's the thing. Everywhere abroad offers negative yields. So if anybody wants fixed income, they have to buy US bonds. If they buy US bonds, this rises and its yield will fall, or at least not rally. So the TNX is the opposite of the TLT, basically. Look, see, TLT, yep. TNX. The TNX is the ETF representing the 10-year yield, one of those bonds that we offer. First of all, it's going into resistance, much like the TLT is going into support, right? It's a breakout from here, but TINA kicks in. That there is no alternative. Billions of dollars overseas that wants fixed income. The higher this goes, right now it pays 1.6%. The higher it goes, the more attractive they become. So the more money comes into them. So the price of the TLT, the bid for the TLT goes up, this goes down. That's always the case. They are inversely related. They travel in different directions. That's a mathematical fact. So it's not going to adjust, but trust me when I tell you. So that's why I wouldn't chase this. Although it's technically a breakout and it should go to high heaven, but I wouldn't. Therefore, catching the falling knife of the TLT is a viable thesis again. Now, I'm no longer, am I? I don't think I'm still long the TLT. I closed my GLD, which they go hand in hand, all of these. And I'm still long silver, as I shared it. And, silver had an incredible Friday from price action. I was like, whoa, it brought me a lot of profits, but I didn't book it. It's one of those trades that doesn't cost a lot to be long, but doesn't pay unless you have an explosion. And I'm waiting for the explosion. So
yeah, and that's something that I do like about at least the way that you approach your analysis, because you take into consideration everything like gold, stocks, yields, bonds, rates, inflation, Bitcoin, oil, natural gas.
And I'm long the dollar. Excuse me.
Yeah, that's what I wanted to ask you.
Which is a hedge on silver. So if the dollar continues its breakout, my silver trade is going to suffer. But I think at some point they will both rally at the same time. So the UUP is a terrible ticker to trade via spreads. Naked call buying only, in my opinion, when you see a breakout. So if indeed the US is going to have a tightening cycle, this should break out and recover. So far, it's been falling off a cliff, and finally it's catching. Look, it made a base. Remember I said first job is to stop making lower lows? This is a weekly chart. So these are, each one is 1 week. So this is a month. This is a month. This is a month. That's a lot of base. That's an established floor. Now, this is a neckline that they're breaking out of, another problem zone. So now they've started building this ascending channel that I told you about. So now they're going to ping pong here. If they go above here and come back and test it, then they finish the breakout. These are weeklies, very slow candles. So I'm long the dollar months out. I forgot. I'm in the money. I bought calls in the money, meaning what? Like at price or below current price. So I don't need a move to start making money. I'm right there already.
Okay. All right. Sounds good. And I do like this because it looks like you do set proper expectations here. You do understand how these things interact. I know that when I started trading options, number one, I was just doing calls and puts, and that was very volatile, Nick, because it's like, one day you're rich, the next day you're broke. Yeah. And it's just very, I guess, it's just a little bit of a stressful life. And I do feel a lot more comfortable with the credit put spreads, with the higher chances of success, and playing it that way. It just makes a lot more sense. But I guess for some, like you said, on CNBC, they're always telling you these these calls out of the money, and they don't tell you there's other ways that are safer to trade options.
Definitely. Buying puts you at a disadvantage right away because, excuse me, you need something to happen to win. So when I buy a call, when I buy a put, when I buy a call spread, when I buy a put spread, when I buy options, I need a price move in that direction. When I sell something, it's the exact opposite. I need nothing to happen. So let me rephrase it. What is easier, to find out where a stock is going to go, which is one point, or to find out where it's not going to go everywhere else? So to me, it's finding everywhere else point. Let me put a visual to that. Take out of this. So what are the odds that Apple is going to be at 120 this year or middle of early next year? What are the odds? Pretty low. And if that's the case, would you own it? Heck yeah, for me, based on this chart, based on what I know about the Apple fundamentals. So if I sell a put here, I don't need a rally. In fact, the stock can collapse and I can still make money. And the worst case scenario is me owning Apple after a 15% discount. That's the kind of risk I like to take, either beforehand or on a falling knife basis. So that's the kind of high odds, boring trade setups that I love. I say boring because they need nothing to win. And it's super exciting what we did with Clover on Friday in the chat room. Super exciting. If you want to see it in real time, I said, you know what? Clover is looking interesting. I forget where it was in the chat room, somewhere on here. I said, I'm long already, but I'm going to buy some calls. Boom, out of nowhere, the stock rallies to high heaven. And I was like, I don't know what happened. So 5-minute chart. There we go.
And someone's asking about those lines. You draw those, right?
Which ones?
The regression lines?
No, this red-blue line is not a trading line. This is a simple regression line. From TradingView, it's available if you go to indicators and simple regression, I think called regression. Yeah, linear regression, that one. It's just a visual mathematical representation of, quote, reverting to the mean. Basically, it tells me what channel is on. Somebody asked me if I use RSI and whatever. What you see on the chart is what I use, which is this for visual representation. In fact, why is it drawing itself so weird? Anyway, I need to look at that. It should be longer probably. Yeah, I don't know why it reset itself. There we go. So I don't use it for trading. It's just a visual representation. I don't have MACD or anything like that. I don't use the RSI very rarely, but it has its uses. So whatever you use, make sure it's only 2 or 3, max 2, better, and that you specialize in it. So if you think the RSI tells a good story for you, put it to practice. If you see results, keep using it. If you don't, ditch it, get something else. I'll tell you what I use. All right, quiz time. Do you have any giveaways? Hat or something? Anyway, we'll see. Tell me what's my first tool, the most reliable tool. What's the tool I go to first?
I think I know this one.
Of course you know this one. Nobody. Is this thing on?
Yeah, give him some time. Give him some time.
Oh, okay, there's a delay.
Yeah, let's wait for the YouTube people to see if
Are you embarrassed? There's no wrong answer.
Come on, guys. We'll be waiting for the answer. No worries.
There you go. All right. I'm going to spill the beans. That's an eyeball. Okay, so it's eyeballs. What does that mean? My first tool is I want to find levels. And the only way I can find levels is by just looking left. So pick a ticker. Give me a ticker from the Devon. Well, I haven't looked at Devon in eons. Whoo, dang. Okay, so maybe Devon wasn't so good. Okay, perfect. So, all right. Perfect, actually. One day. So people say, I'm going to cover a couple things. People say, what time frame do you usually look? I said, if I didn't look at the stock for a long time, I start with the daily, and it's usually about a year's worth of data. So I look at it, it's like, whoo, dang, that's what I said. So I have no reference. If I look left, there's nothing there. So I need to know what happened the last time we were here. So I go to a weekly. Boom. Now it becomes clear. Well, the last time we were here, we collapsed. Therefore, it is not an obvious place of entry. This is an accident scene. So somebody stuck here from 2018 is going to say, thank you, Lord, I'm out. So overhead supply. Chasing it up here is you're definitely late. You could make money on it, but this is not an obvious point of entry. That would be my advice to my brother if he comes and asks me for that. So look left, find the levels. That's tool number one. What's tool number two for me? It's these guys right here. The volume profile. Very valuable tool because, they say price is truth. So let's go with Snap. Okay. So price is truth. So these volume bars are the same volume bars that you see down here. Only these down here tell you when something happened. Like on that day, there was a lot of volume, and this day less, this day less. Who cares? That's not very useful. These are the same data, only set at what level they happened. So that's super important because it tells me that since February of last year, 62 is the most popular spot to trade it. So if it's falling into 62, it's going to find support. It tells me that this whole zone up here has not had time to consolidate. So it's not bulletproof. So they better hold 70. Otherwise, they're going to come down to 65 in a hurry because that is where this volume cluster happened. That will provide support. So anywhere down here, I would be a buyer of this knife when it's falling, just from the volume profile. Price is truth, and that's what that is. So not too many things. Do I have an RSI? I do have a scan on the RSI on a different platform that I don't watch because I have a specific setting for 2 RSIs and a couple other things that if they happen, make for a pretty good long. So I have a scan for that, but I get like 1 a week or 2 a week maybe, but I don't actively use it. Oh, it's cheap because it's misleading. RSI can, appear sometimes go, oh man, it was a great time to leave, but it's not consistent enough. So I do have 12 things here, but most of them I don't use. I only use my eyeballs and the volume profile, and all the rest of the lines are hand drawn. Everything else, hand drawn. This orange line comes up automatically as the point of interest. So if I zoom in, it'll change because it'll just show me this period of time. Boom. So if I'm only focusing on June, that's all the volume. But the more history I get, suddenly this is the second busiest. Anything in between is a weak spot.
Good call there. Good call. And I just want to bring this up here because we had a lot of people that just joined here, Nick, just so they know what we're doing here. So this is an options workshop that we're doing. We do have a special for Nick's Options Inner Circle chat room. It does expire at midnight today. That is for the full year. So you keep the discount. It is a lifetime discount. So that means that even if the price does go back up, you still keep the 70 something % off that you get. And you have full access to Nick, direct access to, consult about your trades, your strategies. You have access to the chat member only sessions on Sunday. That's not what we're doing here on YouTube. Those sessions are private. They're on Zoom, and they're not, we don't put those on YouTube. Those are just for the chat members. So everything that you're seeing here, this is what we're doing every day in the chat. We go into a lot more detail, obviously. And in the sessions on Sundays, we do meet, we go over the strategy, we digest the news. Is there any one-on-one training? So everybody has direct access to Nick. So yes, you pretty much talk to Nick directly. That's correct. And anything else that you need. I mean, Nick mentored me in options.
How funny is this? I was
if you guys don't know.
they're not saying anything. I was like, my chat room was broken. Like, I was like, okay, now I see all these things. Okay, so never mind. Sorry to interrupt.
No, you're okay. I was just saying it because we did have a lot of people join in, but I just want to let you guys know the deal we have right now does expire at midnight. So we'll be here with Nick going over a couple things, and any questions that you have, we'll be dropping the link there in the chat.
So somebody's asking the volume profile. It's called VPVR, volume profile visible range. But I don't believe it's free with TradingView. You probably need to pay the first level of membership, which is I can't remember, $15. Others, if you have Thinkorswim, it's free in there. So if you're a serious trader, paying $15 a month is not that big a deal. I mean, TradingView has advantages. I'm not selling it. I do get to use it for free because I use it, and you guys are seeing it because of me. So that's kind of like their advertising cost. So I guess you would say I'm sponsored by it, but I don't get paid from them, or I don't get paid for you using them. Great. You have a text note here, so you can put text, but also, yeah, it's easy to use. But
they don't have to do any of this. Like you do all the work for them.
Right, exactly.
So you don't have to kill yourself learning
guess what?
20 years.
A lot of people in the chat room, their charts starting to look like mine, which is music to my ears. When they share charts, they have the lines where or they tell me, hey, did you have an alert? I say, yeah, I actually had an alert. So they're now setting their own alerts like I do. So meaning it's contagious. And I'm consistent, very consistent. You'll see the videos over. If you watch, if you like the way I talked about that one trade setup from start to finish, every video is almost the same. By how to sell a put, what it means to sell a put, how to buy a call, what it means to buy a call. It's all there.
Yeah,
so
and
imagine,
we do have.
Imagine if you see it 3 times a week. If I share 3 setups a week, which I usually do at least, it's like 3 lessons a week for as long as you remember.
Nick, and we're not, and you forgot to mention, I know that, let's say if there is somebody here who is literally just starting to get into options, if you're literally in the stage where you're like, what is a call? What is a spread? What is a credit put spread? We have a member only educational library of videos that were recorded by Nick specifically for you guys. And we keep putting more and more and more educational videos there because it is a library for all members. So even if you're starting or if you're advanced, because there's a lot of misinformation about options out there. So we are trying to help everybody start with with the right foot here. So yes, we do have a video library explaining everything. What is a call? What is a put? What is a credit put spread? All that stuff. Husky, new member of the family, got it, paid the subscription. That's really what you're getting here, right? What you're seeing here is what we do every day in the chat room. And of course, I have to welcome you like everybody else, because that's how we do it at Benzinga. So I appreciate you joining. That's what it's all about. We are a big family here. We're a big community of option traders. We all help each other out. And Nick goes really hard for you guys on Sundays, every day, on weekends. He's really interested and passionate about educating and teaching you guys become successful option traders.
So somebody asked my background. I guess we should have started with that. I'm an engineer who did an MBA, and I was investing all throughout. And then I said, screw everything else. I like this the most. Hey. Yep, make everybody proud. Well, if I can do it, anybody can do it, really, because it is, Wall Street tries to trick us, but it's all logic. It's all simple logic. Use logic and less emotions. The fewer emotions, the better. The more news, the more emotions. So if I choose between having good news, a good source of news or no news, I would choose no news because it's really immaterial. Electrical engineer, that's how I started out. Yeah. So that gives me maybe an edge of being very it's not emotions, nothing personal. Like I like Palantir, and I had no problem saying no to it when it spiked. Mind you, we were just like Affirm. So somebody just today said, Affirm. I said, I love it, but look at where I recommended it down here. And look at what delivered. Somebody says, what about Affirm? I was like, hell no, no way I'm touching it up here. Take that out, and then you can trade it up there. I still wouldn't touch it. But as a trader, if you're a fast trader, you can scalp some money, but not for me. I'm just too slow.
I was I was trading the weekly calls on the breakout, and Affirm has been a great for calls. And I know that you recommended it when it was way lower. So I've been scalping it with options there.
Why is this defaulting me to talking to you only? Okay, so Joseph, Phil. Yeah, of course, because every setup has a buying a call way of doing things. So yeah, I can help. I mean, I'm not going to offer you magic pills there, but I'm definitely going to give you usable information, honest, usable information from a level perspective and from a trade setup perspective. So if you want to bounce a trade with me, I may join you. You may find the trade that I get to join, and it works. Somebody's asking if I had 40K monthly. If you have 40K, what is your monthly? Okay, so it all depends on how you trade. So as far as this is where I hesitate to give a dollar amount, because people set a goal and they start getting aggressive to get to that goal, and then they get in trouble. So instead of doing that, I can say, I like to take trade setups that have 85% certainty of providing X% yield. So you back into the math however you want. And if you take too many trades at one time, you get one bad week worth of data news, and then everything gets blown up. So you have to have a balanced approach there. The blue and gold, I believe you're referring to, did I blow them out? Where'd they go? You're referring to the regression lines, which is nothing but simple regression. These? Or these? Oh, these. Volume profile. I just spent some time explaining what they are. The blue and gold color doesn't matter. It's upticks and downticks. I can't remember which is which. It doesn't matter. It's the volume overall bar that matters.
Yep. So, all right, Nick. So we've been here for about 2 hours giving folks here free education for about 2 hours, hard on picks, strategies, what it is that you do on the chat room. So, Nick, let's have a couple of closing remarks on your end here. And I'll stay a little bit after, just answering some questions about the chat room. Just so, you know, what should we look forward next week? What are you looking at? What are you and the chat members up to for the upcoming week?
So the big thing this week is it's a monthly expiration week. What does that mean if you're new to options? I showed you these purple lines are weekly. So this is a monthly expiration. So the contracts in the olden days, these weren't there. We only had one contract per month. And then they brought weeklies, and then some tickers have sub-weeklies, like the SPY has. The SPX has 4 contracts this week, 4. So it being a monthly expiration on Friday. So the meme has been for the last 3 months, I think, is that monthly expirations are bad for stocks. So I assume they're going to try to live up to that, and there's going to be some sort of a spike in fear somewhere in the middle between now and Thursday. The only difference that this time is that on 9/30, we had a quarterly expiration. So my thesis is, what if they blew their steam out with that 9/30 expiration, because it was a bad time? So maybe this time we'll break the rule of, because it's not that easy. Investing is not that easy. Oh, I fell into a monthly expiration and I'll buy right after that. There is a chance that the cycle is going to break this month. So I'm long and I've benefited from a pop. I booked some and I left some. So the surprise is to the upside, and the market loves to surprise people. That's all I'm saying. And it has one expires on Monday. This is the SPX, the S&P index, 1 on Wednesday and 2 on Friday. So this opens another discussion of what the heck, 2 on Friday? They both expire on the same day. The difference is one settles in the morning and one settles at night. So this one, when the market opens, they wait a couple of ticks and they draw the line. They said, this is it. That's the finish line. Whereas somebody that bought this contract has all day to trade it. This one you cannot trade on Friday. So make sure to pick the right one, whichever one you're using. So next week, to me, is all about that. And let's see how they work after a bad jobs report, because I thought stocks should have collapsed on Friday because the jobs report was bad for stocks, but they ignored it. So let's see the follow through. And the setup, I think the blind side is to the upside.
Okay. All right. Anything else you'd like to add there, Nick?
No, just join, have fun. And I think, do you have a cancellation policy to where like it's almost risk-free for them to come?
Yes, I was about to get into that. We do have a
Okay.
14-day money back guarantee for anybody that does
So
want to join.
so
Yep.
if you're serious about trading and you want to learn about options, what the heck are you waiting for? It's basically risk free. Benzinga has been around forever, so it's not like they're going to take the money and run. I've been working with Benzinga since 2011, I'm going to say, and we've been doing this, so we're doing something right. There's value there, otherwise people won't stick around. That's it, and I got to run, do some other stuff.
All right. Well, we appreciate you being here. Everybody say thank you to Nic Chahine for sticking out with us on a Sunday. I'm going to stay around here answering a couple of questions about the subscription and a couple of basic things here on what Nick is doing there in the chat. But I definitely appreciate you, Nick, for staying here with us and helping not just the members that are here, because we do have members that are in the chat, but also for the people that are starting and definitely need a mentor, need your help.
Thanks for the opportunity, and this was a fun bunch. KK is looking for answers. Neo is a good starting point. I mean, it's a good base. Tesla is already almost at its goal, but it can go to 1,000. So I would rather be long Neo here for a trade than Tesla, but they're both strong. Even though I ditched you, Tim. Oh, I owe you an email, Tim. I guess I'll I'll look back. I'm sorry. All right, I'm out.
Okay.
If I end this, it won't leave you, right? It won't kill you. You
No,
didn't
no,
hate.
no. I'm sharing here the chat. I believe everybody can see that there. Um so yeah, thanks a lot, Nick. And guys, do you have any questions about Nick's strategy or Nick's chat room, what we're doing in the chat? I'm staying here with you guys for a bit, just so I can go over a couple things here with you. I do want to let you know the deal does expire at midnight, so you do have like 78% off. And yeah, and that is a lifetime discount, correct? Yeah, so I'm getting questions here on the Zoom. We have about 4,000 people here on Zoom, so yeah, there's quite a few on YouTube. So yeah, guys, you will keep the discount. It is a lifetime discount. If you join today, next year when you renew, you will keep the discount. It's not going to change, even though the price will go up. You are going to keep that price, and there is a 14-day money back guarantee. So if you do want to give it a try, if you've been waiting to get into options, this is it. Like, this is really where you need to pull the trigger, because you have a verified mentor like Nick with options. You have an amazing company like Benzinga that is helping retail, become better traders overall. And you have a 14-day money back guarantee. You literally have nothing to lose. Only, it's only an upside for you guys. So Canadian price. So this is in dollars. You'd have to pay in dollars. So yeah, that is correct. And are we able to ship the laptop to Canada? We've done so in the past, and if for any reason it can't be done, we'll address it with you at that time. But yeah, we do send out the laptops outside of the U.S. as well. And as you can see there, there's a video from Nick. It's literally from Sunday, and this is something we do every day in the chat. Everybody's there in the morning. You can see a lot of people there. Good morning. Good morning. Good morning. Nick is posting the link for the session there, as you can see, so that we all join. Chat members only. Chat members only. We're talking about VIX calls, VXX. We're talking about different trades across the day. We really don't stop talking about stocks. And as you can see, you have full detailed notes responding to all the questions that you guys have. So to me, this is pretty valuable, because you don't really get a lot of this out there, especially when it comes to options. So let's answer a couple questions here. So Janie, is the course program no, this is our own chat. This is the Benzinga chat. It is in our platform. So it's not a Discord chat at all. It's verified Benzinga paying members. There's nobody there's no free accounts like what you have on Reddit or nothing like that. It's not like a social media. It's just for options traders. So the laptop, the brand of the laptop, it's usually whatever we do have in stock. It's a gift, it's a courtesy. I believe it's going to be a Chromebook. That's what I think we do have in stock right now. Will the laptop have any trading info on it? No, this is a laptop it's a new laptop. It's not refurbished. It's not secondhand. It's not aftermarket. This is a new laptop that we're going to be sending out to you, and you don't have to return it after the year. You keep it. You're not leasing it. You're not renting it. This is your laptop. So this is something that you get to keep. Let's see. Do you guys have any other questions about Nick's chat room? Anything related to Nick, what we're doing in the chat, or anything related about the deal that we do have going on that expires at midnight? Let me know, so I know I'll stay here for a bit with you guys. How do you get into the chat with Zoom from the YouTube? So it's only for pay, it's only for chat members, the Zoom call that we have on Sundays. This is not the chat member session we have with Nick. That's only for members. It's not on YouTube. Let's see. Do we have to pay for Benzinga membership in addition to this membership? So this today is the membership for Nic Chahine's Options Inner Circle. It is just the chat room. We do have the sessions on Sunday, all the videos, the educational videos that you get, the video library. If you're just starting out, you get all the live trades there when Nick is whipping out trades like literally every day and giving you resources and help on the weekends, like you can see. So no, it does not include Sunny. No. Let's see what happens when Nick goes on vacation. Well, last time Nick was on vacation and he was still doing his sessions on Sundays. He's pretty committed to this. He's committed to your success, and that's good. That's good, right? I mean, I know I've heard of a lot of different options, services, and what I hear is just simply there's really not a lot of one-on-ones. There's not a lot of direct assistance, direct answering questions. Today, we answered about 100 questions here. We went over like 50 tickers, and we do this every day in the chat. So this is really what we do normally. Sandfax, can you use your own laptop? Yeah, you can use it. It's, yeah, absolutely. This is browser-based. So it doesn't matter what you're using. You will be able to access the chat room. Like I open it from my phone, from my laptop, from my tablet. I'm going to post the link here for you guys in the chat on the Zoom. MR said, no, you do not. But if you want to call me, we'll see what we can do. I'm going to drop my info here. Make sure to email and call today before midnight so that the deal doesn't expire on you. What parameters does Nick use to find stocks to trade? Will he teach us how to set up our trading account? Well, I mean, we were doing trade setups here since we started. So, I mean, that's a little bit, this is a sneak peek we're giving you from the chat room. So yeah, he goes over his entire logistics of putting the trade. And he explained it earlier, like he'll go over the macro, the micro, he's going to go over the price channels, the fundamentals, the technical levels, the resistance levels that you need to be looking for, how to play it, risk management. I mean, this is way, way, way more than what a lot of you guys are used to. You guys are probably used to paying $10,000 a year or something like that. And all you get is an alert that says buy here. And that's it. So this is definitely different. This is something you won't find out there. We're doing customized service, customized assistance. So everybody here is struggling with something different, very likely. Like I am, let's say, I've been trading options for like 2 or 3 years now. And I might be struggling with one thing, but the person next to me might be struggling with something else. So everybody, has a different cup of tea of what they're working with, their struggles as far as what they need to improve. And regardless of what it is, Nick is going to help you. He helped me improve my options trading by a lot. So that's really why we started doing this, because he helped me with options to the point where we were just like, hey, we need to help members with this because that's what we're getting asked for. Let's see. Is there an access to all of Benzinga's content offer or only parts? Yeah. So today we're doing the Options Inner Circle with Nic Chahine. This is the chat room for Nick. If you have questions about anything else, you can always call me and email me for sure. And my contact's in the chat, so you can always reach out if you need to. Yeah, so yeah, 1297 for the year, correct. I'm gonna put my number here in the chat again one more time. Does anybody have any questions on the chat room itself, like what we're doing there, or any questions you have? As far as what I think, because like my experience and what I talk to other options traders, I'm very, very positive that the big majority of you guys are probably just doing calls and puts. And I'm just going to tell you right now, like that is the recipe to blowing up your account. It happened to me twice when I started. And, it's something that we wish you guys wouldn't have to go through. Like, I don't want you guys to learn the rough way like I did, which is basically like losing money. So we want you guys to start with the right mindset, with the right expectation. We want you guys to start with the right foot, right? You don't want to start and just lose all your money and learn by blowing up your account. I don't want anybody to go through that. And that's kind of why we're here. We're doing outreach, right? If I can save one person from blowing up their account, that's good enough for me. So a couple questions here in the Zoom chat. Do I have a number? Yeah, I have a phone number and I have an email, and I'll post it again here in the chat for you. Let's see, Sharon, I'm joining. This is awesome for me. I've been looking for a platform like this for years. I agree. I wish this existed when I started because it didn't. And that's why I had to learn the rough way. So Sharon, got to give you a warm welcome here to Benzinga. That's so beautiful when we all join and work together. As an options trader, I can tell you the more the merrier. That's really what it's about. So Sharon, congratulations on joining. We love having you here, being part of the family, part of Nick's family, part of the options chat room family. Everybody there is very nice, very welcoming, very helpful. It is a great environment for you to actually ask questions and learn. It's not like if you ever have a question about options or trade, please do not go to Reddit or any of these free chats or TikTok or any of these places. Like, you need to ask somebody that's verifiably done this successfully for decades, if you want to be serious about it, right? So good stuff, Sharon. Appreciate it. Is the chat room where all the training videos are found? Yeah, John. So you have to join the chat room. And once you join the chat room, just email me and we're going to give you full access to the video library. It's pretty much like an options educational center that we have there. And we keep adding more and more and more videos, all the way from basics to advanced. You can literally teach yourself this stuff if you want to. Like, that's something that something I did. As soon as we started putting more videos, Nick started putting more videos and all that stuff. I started looking at them, taking notes, pen and paper, guys, pen and paper. If you want to be successful at this and you don't even take the time to write down notes on a notebook or somewhere, you're fooling yourself, right? If you want to learn, you need to take it seriously. That's what I'm saying. So all the videos there, I was able to teach myself a lot of things and understand concepts that I was confused about. But Nick explains everything in such a simple way that everybody can do it. Literally, everybody can do it. So yeah, that's your answer, John. What is the chat room schedule? Schedule's 24/7. We don't close. The chat room is open 24/7. We have members from Hawaii, from India, from all over the world. And obviously there's different time zones. And, it doesn't matter. The chat room is always active. We always have people asking about trades or strategies or, all that stuff. And that's beautiful, right? The more, the better, because we all get to hear each other's trades and strategies. Like if John goes to the chat and is asking a question about a pick, Nick is going to answer your question, give you a green light or a red light or how to approach it. And everybody else gets that pick, that trade idea free because somebody asked a question about a ticker, just like we did with stock today here. So yeah, the schedule is 24/7, Mana. Okay. Is there a recording? Zoom members, I believe, will get a recording. If you did register, you will get a recording. If you're on YouTube, you will not get a recording. Okay. Yeah, so basically Nick is our options mentor. When it comes to options, he's the guy that you want to follow. He's the guy that you want to learn from. I know there's a lot of people out there that pretend to know about options on YouTube, and that's going to do you more harm than good, unfortunately. And yeah, it's just, you got to take it seriously. Like, if you were to invest in yourself, you definitely want to do it with a solid service, right? 14-day money back guarantee with Nic Chahine. All right. Let's see. Does Nick provide trading ideas? Yeah, Joe, we do that. He provides trade ideas all day. Like, we actually gave some trade ideas and setups here in this session. So let's go to YouTube here. Got a couple questions here. Phil Ford, been considering signing up and 10 steps closer after this. Okay, well, give it a try, Phil. 14-day money back guarantee. You really have nothing to lose at that point. If you don't find value, get all your money back. That's it. End of story. That's it. D1EA, is there an access to all of Benzinga content? Yeah, you'd have to give me a call if you have specific questions like that, unrelated to the chat room. Isaac, can you guys include access to Benzinga Pro Tools to this deal? You got to call me, Isaac. You got to call me if you want to talk about that. For the session here, we are only talking about the chat room with Nick. This chat room that you're looking at on the screen. That is where we are all day. That's where Nick is all day. As you can see, these are videos that he's posting for members only. This is the Sunday video, 2 hours. Okay, 2 hours. So we do a full review here. Everybody there is welcome to join and pitch in, ask your questions, whatever it is. And we meet on Sundays. So just want to clarify what you are seeing right now is not the private chat member session. This is an educational workshop that we do. So yes, this is for the year. This is for the year. Make sure you ask your questions in the chat, not in the Q&A, so that everybody else can see your questions. What is the discount price for the year? It is 70% off. The actual price is about $6,100. Today, we do have a special. So it is like 78% off. So it comes out to $1,297. That's for the full year. So you keep it. And whenever time comes next year and you got to renew, you basically keep that discount. So you renew with the discount. It's not like it goes away. It's not like it's just for 1 year. You keep the discount pretty much as long as you're signed up with it. So does anybody here have any additional questions, anything that I can help you guys with just before we end the stream here? Let me know. I know there's a delay in the YouTube, so I'll give you guys a second. But definitely, I would definitely suggest here, like, even if you're working 9 to 5, like, this is something that you can work out. So, you know, even if you can just pop in the morning or attend the sessions that we do have on Sundays, which are just for the chat members, and then you'll have a lot of value. I mean, you're meeting 2-3 hours on Sundays with Nick, so that's pretty good. And taking it seriously, like a career, right? If you want to be a successful trader and you want to be consistently in the green, you need to understand that this is a career. It's not a hobby. A hobby is going out for a walk. We're talking about making income every day here. So we do take it seriously. We do take your success seriously, because that's what we're trying to do here. Help you guys become successful option traders for the long term, right? Not just one lottery ticket. We're talking about long-term consistency. And, you know, if you don't have any education to your trading, if you don't have a strategy, you really are an emotional trader, like it or not. You probably buy high and sell low. And that's really a big mistake that kills a lot of option traders. It blows up your account. So, okay, AM, can you summarize again what we are getting? Okay, so for today only until midnight, you do have the 70% off Nic Chahine's options inner circle chat room. It's live trading for options. It's options education, mentoring, holding hands, all that stuff. And you do get a free laptop. It is a courtesy laptop that we'll send to you. You have a 14-day money back guarantee on this as well. So, but yeah, definitely try it out, because you really do have nothing to lose if you do have that, you know, money back guarantee period. And keep in mind, education is a lifelong process. It doesn't happen overnight. Success doesn't happen overnight. Neither does failure. It's a process. Failing is a process. You could be failing and consistently failing and not realize it until your account is at zero. So, you know, it is a process. Nothing happens overnight, but you do get a lot of value that can really speed up that learning curve, right? Instead of just going off by like what you get on like TikTok option, all that stuff. Like you're talking to Nic Chahine, somebody who knows what he's doing. So yeah, that does give me peace of mind, to be honest. But yeah, it is a lifelong process. And basically you do want to make informed financial decisions, because if you don't, somebody else will do them for you, which means that you're going to lose money, right? So, and remember, Benzinga is for retail traders. This presentation here, we're doing it for you guys, you know, for Felix, for Sharon, for Husky, Yemi, everybody here that is basically trying to become a better options trader. That's what we're trying to help you with. That's what Benzinga stands for opportunity, to help retail traders. We know that you guys got the short end of the stick. The markets were really not even meant for retail traders. So being able to trade with a community that works together makes a huge difference. And that way you don't fall into what I call vacuum trading. That's what I was doing. That's what a lot of traders do. They just, you're in a room all day with headlines here, headlines there. You're not getting any feedback to your trades. You're processing the data internally, but you're not really processing the data with an actual community, right? And not just any community, Benzinga community, of course. So don't fall into the emotional trading. Don't do the whole social media trading thing. If your future self would tell you anything today, like if your future self would tell the present you something, it would be to do yourself a favor and get the education. So do your future self a favor, save your future self money. Don't blow up your account. Do it the right way with the education. And then from that point, you'll really be able to see what this can do for you. Because if you're just doing calls and puts and you don't have a strategy and you really are winging it like 99% of people are, you're setting up for failure. And you know what they say, right? We don't plan to fail, we fail to plan. That's exactly what's happening with retail traders. So we do enjoy having here the largest community of educated options traders. So just know that there are people that can help you besides Nic. So like Nic is the mentor, but let's say if Nic is out or sick or something like that, and you have a basic question about a call or a put or a spread, something like that, we have tons of people in the chat room that would love to help you, because that's what we are. We're a tight community. We're very helpful to each other, and it's a great environment to learn. Like if you go and ask a question about something in options in another place, they might laugh. People might laugh at you, or just, that's how it is. So we don't have any of that in the chat room. We are all helpful. We all help each other out. We're all doing the same thing. We're trying to learn and make money. It's that simple. And everybody there is a verified trader. Okay, no bots, no fake profiles, none of that stuff. And as you can see, there's several winning trades here from Nic. But yeah, guys, I really think you need to take this chance. Stop skipping steps. Stop trying to wing it, and make sure that you actually take it seriously from the beginning. If you are new and you're starting to get into options, this is for you, right? Take it seriously, because you have a mentor who's going to basically answer every question that you have. If you have questions on your trades, on your strategies, on your entries, on the type of trade that you're doing, like, is it better to do a call, a put, to sell it, a spread on the bear or bull side? There's just different ways to trade options. And if you're just doing calls and puts, like, it's like you're going to a gunfight with a butter knife, because you are competing against another trader. You are buying a call, somebody is selling you a call. So you, by definition, you are competing with other traders. And I promise you that you want to be the trader that's educated, because that's the trader that's going to end up winning in the long term. And that's what it's about, consistency. So we do got some questions here in the Zoom chat. Can I get access to the recordings for today's presentation? Traffic made me join late. Okay, so everybody that joined the Zoom will get the recording. We always get this question 100 times. So if you do regularly attend these sessions, make sure to let everybody know, just so that we don't kill time with the same question 10 times. Do we get any Benzinga platform? Yeah, you'd get the platform that we're looking at now, the chat room with Nic. That's what you'd be getting. Obviously, the sessions we're doing those on Zoom, but you pretty much would be getting everything Nic. You're going to be getting trades every day in the chat. Okay, strategies, educational videos, all that kind of stuff. That's really what you're looking to get into here. Education, trades, that's what it's about. Phil, hi, Rodrigo. I sent you an email. Appreciate it. Okay, sounds good, Phil. Appreciate it, man. All right, guys, does anybody else have a question here about the chat room or anything that we're doing here right before I got to end the stream here? I got a lot of emails I need to get back to. William, call me, email me, okay? This is about the options inner circle chat room. So I'm going to drop the link here one more time before I head out. If you do have any questions, speak now or call me. Either or. And I know there's a little lag there on the YouTube, so I'm going to give you guys some time there. How much money do you need to start options trading, Ali? There are people that start with 500, $1,000. I mean, it doesn't have to, everybody's coming from a different place. So as long as you have I'd say probably $400 or $500. Like I bought calls from Nick for $200. So it's always going to change. Like, contracts prices are always different. AM, are trades discussed one proposed by Nick or by users? So you get them all. You get Nick's trades, you get the trades that everybody else is doing. So like, let's say if Joe is asking about CEI or any stock, right? Nick is going to give him his opinion of the trade. If it's worth it, because a lot of people literally just go in there like, hey, Nick, can I buy calls for Netflix? Nick was like, I wouldn't do that. And the next day, Netflix tanked big time. So it's not just about making money, guys. It's about not losing money. There's two sides of the equation, because it's one thing if you're breaking even, but if you're losing on every trade, that's a totally different conversation. So Nick doesn't only help you make money with trades, he helps you not make, I guess, not informed financial decisions. That's why I would call it. Nick is going to help you from making these crazy trades that you really need to filter, right? And that's really what it's about, you filtering your trades. So, I mean, for $12.97, really, what's the value of this to you? I don't know, like blowing up your account, possibly, never learning, just winging it and learning by blowing up your account, losing 10, 20, 50 grand. I mean, at that point, like I literally buy contracts that are like contracts for like $2,000, $3,000. So really, to me, a course, well, this options education chat room live trading that we have with Nick, I do see an insane amount of value here for the price, because as an options trader, I can tell you that's like half of the price of a contract that I typically pay when I'm trading my options. And there are people here in the chat that I know, because we do talk a little bit in the chat room, and they tell me that they've lost $50,000, $200,000. The numbers get pretty insane. And the reason is because they jump into options and they don't know what they're doing. They think it's simple. They think they can wing it. They think they're the 1%. Like 99% of retail traders get washed out in the first year. And I think like 90% of calls and puts expire worthless. So if you don't know what you're doing, you can and you will blow up your account. Like the market does not care about your feelings. It doesn't care if this is your grandmother's savings account that you're doing. It doesn't matter to the market. It's just you're either right or wrong, and you want to be more right than wrong. So I really hope that you guys do this the right way. Don't try to wing it. Don't do what I did. Don't learn by blowing up your account. Learn by somebody that's had the experience and already like decades of options trading. So if there's not any other questions here, let me know, guys. I'll give you guys a couple minutes. We're going to be ending the stream here, and just know the deal expires at midnight. You can email me, you can call me if you want to discuss anything, and we can go from there. So I'll give you guys a couple minutes, see if any questions pop in right before we close shop for today. Okay. All right. All right. And we got a couple of new members here. Just want to give it a welcome. Welcome to these fellas here. Back on island, Ziv Sick. We see you. Welcome. Welcome. Welcome to the family, guys. You guys are going to have a great time with Nick. What you saw today was just a sneak peek. And in case you just got in here, just want to give you a quick rundown of what's going on. So basically, Nic Chahine, the options mentor here, we just went over like a 2-3 hour session, educational mostly. We trade setups. We talked about the markets. We talked about the whole Evergrande fiasco, the jobs report, the dollar, Treasury bonds. We really get pretty deep in the weeds, and you kind of have to do that. If you think the stock market just goes up and down because that's what it does, you really need to open your eyes, because there's a bigger market out there, and everything interacts with each other thing, like bonds, yields, treasuries, rates, the Fed, tapering. crypto, oil, natural gas, you name it. Like all these things interact with each other and they do impact each other. So being able to have all that, packaged together in one chat room on top of getting trades every day, like 3 to 5 picks, and not just any pick, like you literally get videos with detailed explanations from Nic. So you all get that in the chat room. Yeah, it's definitely worth it. I can tell you as an options trader, my learning curve has gone up. So I'm pretty sure that you guys will be on the same page, but it doesn't happen overnight. I put a lot of time, I put a lot of effort into doing this. And if you want to be good, if you want to be successful at anything, you have to do that. Like there's no easy way around being successful. It takes hard work. It takes dedication. And look, it's a career, right? Do you want a sloppy career? Do you want a good career? Do you want to be successful? Or do you just want it the easy way? Like, because ultimately you got to remember, easy come, easy what? Easy go, right? Easy come, easy goes. So it takes time to be successful, just like it takes time to fail. Nothing's overnight. But as you continue learning, as you continue taking on challenges and becoming a better options trader, making sure that you have your points down. If you don't understand the relationship between XYZ and something else, that's what the chat room's there for, so that you learn. It's not just about making you money, because that's the byproduct of the education. The education is really where the value is, because we want you to be successful and independent. Obviously, Nic is always going to be your mentor. Nic is always going to be there to help you happily, teach you, go over trades and strategies. But we also want you to learn what we're doing. We want to give you the secret sauce, right? We don't just want to give you the trade and that's it. We want to add as much value as we can, because we truly care about your long-term success. That is why we're here. That's why I'm here. That's why we do this on Sundays and every other day that we're here. So, and there's a lot of people that I've seen great progress, and I can't take credit for it because they did the work. They were motivated enough and took the time and put in the work, put in the effort. They understand that if they do want to be successful, you have a job to do. You have to put in the work, right? The good thing is that Nic is giving you the education. You don't have to teach yourself. People try to teach themselves, and it's the worst mistake you can do, because you're going to teach yourself on top of things that are very likely incorrect. And then you're going to have to you're not only going to have to learn, you're going to have to unlearn all the stuff that you thought was right, and then starting from the right perspective. So yeah, that's what we're here talking about, guys, giving you long-term success when it comes to options trading. And everybody here that joined, just want to welcome you guys to the family. Hopefully everybody here will be able to join at one point, because we do go over a lot in the chat room. I've been in different chats throughout my trading career, and I can tell you that none of them is as customized like this one, where you can directly talk to Nic and get an answer right away for your trade, either helping you make money or helping you not lose money, because it's not just making money, it's not losing money, right? So two sides of the equation, and let's not forget it, because a lot of people just focus on the making money part, but the risk management is where it's at. So I definitely, I encourage you guys to take the leap. Understand that if you do want to be successful, you need a mentor. Probably number one, the best thing you can do. Like, I talk to a lot of people that are successful in different industries, different things that they do, and having a mentor is like the number one. It's the number one thing that a lot of successful people that I've talked to have in common, meaning that they all have like a mentor that helps them and guides them. And it's pretty cool, because you make money on top of learning, and that's awesome. I do like that. There's not a lot of stuff out there like that. So I'm going to drop the link here one more time, guys. I have to get back to all these people that are emailing me. Just want to do a rundown of what the deal is. 78% off Nic Chahine's Options Inner Circle chat room. It is for the full year. You get a courtesy free laptop that we're going to hook you up with. on the house. That's not that nothing to do with the price. It's just a gift. It's a courtesy that we're giving to you. And you keep the discount. So even if the price goes back up to 6,000 like it was, you're going to keep the same price and discount when you renew. So even if it goes up, you keep it year after year. So you're locked in, and that's pretty good. So it's not just for 1 year like most places do. They just give you an introductory discount, and then the next year they jack it up, like Comcast and these other companies do, cable companies. So with us, it's different. You get the deal and you keep the deal. There's no ifs or buts. You keep the 78% off for life as you continue to renew. So Alfred, which trading platform do you advocate? I don't advocate any platforms. As far as personally me, what Rodrigo uses, I use different platforms, and I have different accounts for different things. But I mean, what really matters is knowing what you're doing. You can make the trade from any platform. It doesn't matter. And you can only trade options during regular trading hours. So it doesn't matter if it doesn't matter if you're like on Robinhood, and because I know you can only trade till like what, 9 a.m., something like that. So you can't even buy any calls or puts until 9:30. So it doesn't matter. You're good with that one. All right, guys. So it's definitely great being here with you guys. I'm going to sign out now here. I just wanted to answer a couple questions with you guys. If you have any questions about the chat room or how to join the community, let me know. Give me a call. You have my information everywhere here on the chats, and reach out if you have questions. I'd love to help you however I can. And other than that, guys, I appreciate you guys being here, taking the time to work on your education. We have to, well, I mean, Nick is already in the chat room back, but I have to go help a couple people out there that do want to join the family, and very smartly so. So applause to all these people that are only not trying to earn money, but to learn how to do it. So good stuff, guys. All right. Well, thank you for being here, guys. Appreciate you. And you have a great weekend.